Huh. As indicated by those watching, audio is clear, handsome faces clearly, extremely, very clearly visible. So, ladies and gentlemen, let's go ahead and start point 6 of CA students. Exclusions of what? Exclusions in the definition of capital asset. So, ladies and gentlemen, we are doing a chapter called Capital Gain, fourth head of income, charging section. Two conditions that will trigger capital gain. If these two conditions are satisfied, then only we compute. Otherwise, we don't compute only. If you use the word exempt, no, I will not calculate only. Correct. Sale minus cost will be done if one, asset is a capital asset, and two, transfer is a taxable transfer. If asset is not a capital asset or transfer is not a taxable transfer, we will not calculate. Correct. We are learning the meaning of capital asset defined in section 2 clause 14. We are interested in inclusion because we solve sums on inclusion. Use your brain. If it is exclusion, we say not a capital asset. Don't solve it. We solve a sum only if the asset is included. But the inclusions are defined in a very, very horrible manner. What is capital asset? Sab kuch. Everything is moh maya. Tangible, intangible, movable, immovable, fixed or circulating. Everything is capital asset. Which means that we have to focus on the exclusion. Anything that is not excluded will be included in the definition of capital asset. What are the exclusions that we have studied so far? Stock in trade, because they will be covered under PGBP. Gold deposit bonds, removal of illegal gold. Special bearer bonds, removal of illegal money. Different types of gold bonds, which is legal gold, but government wants the custody. So, requesting you to surrender and take bonds. Rural and agriculture. Rural and agriculture, it has to be both. So, urban agriculture is a capital asset. Urban non-agriculture obviously is capital asset. Rural non-agriculture is also capital asset. Rural agricultural land in rural area used for agricultural purposes. We studied the definition of rural, urban area. Anything that is not urban will be rural. So once you step outside the urban area, you enter the rural area, that land used for agriculture purposes. And last, by the way, before I tell you the last exception, you all remember the inclusions? That is what? All assets. So tell me please your calculator, pen, notebook, specs, textbook, highlighter, watch, clothes, AC, TV, fridge, washing machine, projector, bag, bed. Are all of them capital assets? Yes. As of now, all of them are capital assets. But somewhere we are not able to digest. Correct or no? Should we remove them? Chalo, let's remove them. Assets which are your personal and movable assets. Any asset which is personal and movable. Personal and movable. Personal and movable. Personal movable asset will be excluded from the definition of capital asset. Personal movable asset will be excluded from the definition of capital asset. It has to be personal and movable, just like it was rural and agricultural. Which means, if my asset is personal asset, but it is immovable, think about it. My residential house, my house, is it personal? But it is immovable. It will be considered as, because what is removed is personal and movable. So your notebook, pen, calculator, bed, bag, bottle, they are personal and movable. They will be excluded. House is not excluded. Then, if it is your business movable asset, office furniture, office plant and machinery, are they movable? But they are capital asset. And they have to be. That is why in block asset there is capital gains. If office assets were not capital assets, then how will there be capital gain in block? Whenever the selling price of the block is more than the value, or whenever all the assets in the block are sold, do we calculate capital gains? Then it has to be capital asset. Otherwise, we can't calculate. So business assets will always be considered as capital asset. What are we excluding? Correct or no? And supposingly you have business immovable. Very easy. Is this a capital asset? Yes, because what are we excluding? Personal and movable. Personal and movable. We are excluding personal and movable asset. So your notebook, pen, calculator, etc. is not a capital asset. Correct or no? My residential house, is that a capital asset? A personal immovable. What is excluded? Personal and movable. Personal and movable. You understand this? That means something that you were not able to digest. Sir, how can my notebook be, my highlighter be a capital asset? Please remove. Have we removed them? But time has come to do a little post-mortem of this. We got to know the logic. Logic number one. Do you understand? These assets that you have acquired, your notebook, pen, calculator, watch, they are not acquired for earning income. Don't you think so? You purchase notebook so that you can study, pen so that you can study, watch so that you can check the time, bag so that you can fill your stuff. You have not purchased your pen thinking, wow, one day I will sell and make money out of it. Is that why you purchase your stationery, your calculator, your highlighters? No. One reason for excluding these assets, your personal movable asset, is their objective is never an investment like a capital asset to make money. They are never acquired with that intention in mind. That's one reason. There is one more reason, a bigger reason for excluding these assets. What have we excluded from the definition of capital asset? Personal and movable. Personal and movable. Correct? Eh? For that, there is a second reason. And for giving you the second reason, I want to ask a question to you. Please give me the correct answer. Are these assets? Take your notebook as an example. Is this a personal movable asset? Have we removed it from capital asset? Yes. That means on this asset we will not be having capital gains. Correct? Eh? For the taxpayer, for the assessee, is that an advantage or disadvantage? Removal of this personal movable here is an advantage or disadvantage. You understood the question? Removed from the definition of capital asset. Therefore, on these assets, there will be no capital gain arising or chargeable to tax. Is that an advantage or a disadvantage? Your reaction to which is, sir, what is this question? Obviously, when we remove something, that means there won't be any capital gain. And if there won't be any capital gain, there won't be any tax. What kind of a question you are asking? And therefore, it has to be advantage. But those who are saying disadvantage are thinking, sir, itna easy to ho nahi sakta. So if he is asking that there must be some catch and therefore disadvantage. Is that the reason? Then what is the reason? Sorry. I am not even saying your answer is right or wrong. But reason is definitely wrong. Yes, please. You understood the question. Advantage or disadvantage. You were saying something. Reason.
Because the tax will be low.
That's the most obvious reason for the answer advantage, sir, that if you remove it, there won't be capital gain. There won't be capital gain means there won't be any tax. So obviously it has to be advantage. Anyone wants to say anything else? I know you are in shock thinking that what kind of a question is this? Your main thought process right now is that. At least you all have understood the question. Your main thought process is, sir, what kind of a question is this? No one else is saying disadvantage. No, only one person said disadvantage. Everyone feels advantage. Anyone feels, sir, first you answer, then we will judge whether you know or not. चाय फेंक के मारेगा. हाँ, car, book, anything you take as an example in mind and think about it. नहीं आएगा. Is what is happening, what they are trying to say. Then you are asking a question or answering the question. So first say no advantage, disadvantage, then start explaining. No, I don't know your answer there. What you are explaining? Disadvantage. Why? Hmm. Most people are thinking advantage, sir, no capital gain, therefore it has to be advantage only. No, we are saving tax. Chalo, take. I'll give you the answer, you give me the reason. I should have given an offer. It is a disadvantage. Therefore, the question, had it been an advantage, I wouldn't have spent time. It is, of course, a disadvantage. Why? Two people said disadvantage, but gave wrong reasons. Kuch wo means, what do you mean by wo? Who are you, Rohit Sharma? I understood that first line which you said, kuch kharid raha hai to expense hai. After that, what are you saying? I didn't understand anything after that. When you buy anything, it is expense. So what? Further, go further. Any income does not arise at the time of acquisition. Income, if at all, will arise at the time of transfer. So purchase ka don't tell me. Tell me about sale if you have. Bol. You could have been right if you would have continued. You want to continue? Bol. No returns. Like how? Can you explain? Track is correct. Try kar. There can be some value which will be almost negligible value, as good as no value. Or may I put it this way, that the selling price will be always less than the cost. There cannot be a gain in these assets. Use your brain. Can you sell your notebook, your pen, your calculator at a price higher than you purchased? Think about it. Think about one t-shirt of yours. Supposingly you buy a t-shirt, say one brand, US Polo Association. The original t-shirt of that brand will probably cost 2000 rupees. Proper store, not the other bridge. 2000. You can buy from Mintra or AG or sale. They reduce the shopkeeper margin, so you get the original stuff at a lower price. You bring that t-shirt home. Now it is an open challenge. Can you sell this t-shirt at 2001 rupee to someone? No. At 2000 also people won't buy from 2000. They will take from the shopkeeper. Once you take the t-shirt and step out of the shop, the value is half. It has become second hand. For 5 years you use that t-shirt. US Polo is a brand where nothing happens only. After 5 years you get bored or your size changes, but nothing will happen to their garment. And in India there is life cycle of clothes. Party wear, daily wear, night wear, holy wear, pocha. There is a product life cycle. So 5 years you have utilized that t-shirt to the best of its abilities. At the end of 5 years, supposedly you sell that t-shirt for 500 rupees. You were saying no value. I said negligible value. As good as no value. This 500 rupee that you are getting now is actually a profit because you've exhausted the utility of the t-shirt. But if considered a capital asset, so you know what will happen. Sale consideration 500, cost of acquisition 2000, which will show a loss, and this loss you will use to set off against other profits. These assets will generate a loss always. If we keep them capital asset, so we will do sale minus cost, create the loss and set off that loss. But if we remove them from the definition of capital asset, then we won't do sale minus cost. We won't create the loss. We won't use it for setting off against other profits. Removal is a loss to the taxpayer. Removal is a disadvantage. You are not saving tax. You are losing the adjustment of law. You are not saving tax, you are losing the adjustment of loss. Understood? They will always have a loss. When we say personal movable will always have a loss, that's common sense as far as your notebook, pen, calculator, t-shirts are concerned. Of course, there will be exceptions. Of course. Okay. For example, the t-shirt which Saurav Ganguly waved in the balcony of Lords year 2002, you may not be aware also. Your generation may not be aware of that historic moment in Indian cricket. If you were to ask a cricket fan who has followed cricket for maybe 30, 40, 50 years, the best moment of Indian cricket was not 2011 World Cup. It was not 1983 World Cup. It was not 2007 2020 World Cup or 2024. These are World Cups which we have won. Fair enough. No problem. But this is year 2002. In my humble opinion, Indian cricket has not seen a better day than that. Indian cricket was going through horrible times in year 2000 when match fixing scandal was discovered on the captain Mohammad Azharuddin himself, and no one was willing to be the captain, including the legend Sachin Tendulkar. At this time, Dada said, "I will be the captain. I'll see what has to be done." He taught the team to live with respect. Australians always used to be the boss. Steve Waugh reached for the toss. He said, "Wait, I'm busy. I'll come." He made the Australian captain wait for me. He was told that you have to be 12th man in one match because you are injured. You have to take the drinks. He said, "I won't take the drinks. I am the prince of Bengal." We know how to live with respect. Just before that tournament in England, one India-England tournament had taken place in India. Last match was in Wankhede Stadium. And India lost the match and therefore the series. England all-rounder Andrew Flintoff removed his t-shirt and he was running around Wankhede Stadium. This normally does not happen in cricket. Footballers do it. Cricket is a gentleman game. Indian cricket did not. Saurav Ganguly did not. He said, "Now what to do?" But they have won the series. They are celebrating. Immediately thereafter, there was India-England tournament in England. Deciding match, last match of the tournament in Lords, the Mecca of cricket. India had to chase some 326 runs to win that match. Now, your generation has seen 2020 cricket. And 326 ka target appears to be very normal for you. Those days, 2002, if the first batting team has scored anything more than 200, somewhere near 250, then the chasing team will not win the match. It was clear. So 326 was in any case a very big target. India was roughly 140, 150 for 5. The top 5 batsmen, Tendulkar, Sehwag, Ganguly, Dravid, they were all back. Most of us, of course, switched off the TVs, got busy with our work. But the hardcore fans were still, they did not lose hope. After half an hour, 45 minutes, people started calling each other because there was no broadcast or WhatsApp or anything. And switch on the TV again. See, something is going on. And 2 unknown youngsters called Yuvraj Singh and Mohammad Kaif, whom no one was aware who they are, suddenly took the match away from England. India actually chased 326. It still is the top 5 chases in one-day cricket. Top 5 or top 10 maybe. Because of late, lot of good big chases have taken place because of T20 cricket. And once that happened, once the winning run was achieved, Saurav Ganguly, then historic. Even today, you can Google, search on YouTube, NetWest Series 2002. And I know, if I tell you to research on taxation, the probability of you doing that search and this NetWest 2002 final Lords, Saurav Ganguly and his t-shirt, that image is still in the brains historically. That is an event where India, did that was something that was impossible. 2011 World Cup, after a point we knew that we are going to win this. Once we defeated Australia in the quarterfinal, it was clearly visible that we are going to win. Plus final was in Wankhede and plus Pawar Sahib was the president of BCCI. So basically his objective was only one thing: bring the cup home. And 2023 people thought that again we will win. But then World Cup went in Ahmedabad. And then 2024 ka Lok Sabha election ka funds had to be generated by changing the result of the. So let's not speak about everything on record. So we all know what happened, and the story, plus minus story also, that in one day World Cup Indian team was told, you lose, don't worry, you can cry for some time, Don't worry, we will give you T20 World Cup. Wait for 6 months. In T20 World Cup final, South Africa was told, you lose, don't worry, we will give you World Test Championship. South Africa is in World Test Championship final. Or high probability of winning also. Everything is set, bro. Everything. But you watch movies, no, knowing that they are not true. Watch it for entertainment. Bas. I spoke about one web series on Amazon Prime, Inside Edge. There is a web series on Amazon Prime. Inside. Don't ask for user ID password. Buy your own. Inside Edge, season 1, season 2, season 3. Will tell you all the dark realities of cricket. But that t-shirt of Saurav Gandhi, if auctioned today, can fetch lakhs and crores of rupees. Yuvraj Singh hit 6 sixes in an over 2007-2020 World Cup. And that also, the bowler was Stuart Broad. Stuart Broad supposed to be today a legend. But he hit 6 sixes in an over again. Flintoff. Just before that over, Flintoff came and did some sledging. So he's like, wait, I'll show you. 6 sixes. If that bat is auctioned today, it can fetch lakhs and crores of rupees. This is India, ladies and gentlemen. If Sachin Tendulkar auctions his old stinking underwear, people will buy it for lakhs and crores of rupees. Old stinking hole wala socks. See if people buy. I once saw an ad on Quicker to sell old products. OLX Quicker, old toothbrush to sale, 12 rupees only, used only once. Don't make the face. No one is asking you to brush your teeth with a second-hand toothbrush. You can use it for cleaning your walls or the aluminum sliding of your windows. Second-hand toothbrush is not for brushing. But 12 rupees you are getting for cleaning to bring, no. Try karna bro, No. Celebrities can sell. That's a different thing. And most of that money goes in charity. You and me cannot sell our old personal movable stuff at a premium. It will be a loss. And we won't get set off of that loss. Why, sir? Understand the chronology. Not a capital asset. So we won't compute. And if we won't compute, there is no gain or loss. And therefore it is disadvantage. If it was a capital asset, it would have given us a free loss to compute and take set off against other taxable income. Understood? It is a disadvantage. Personal and movable asset. Logic is clear. But this is still not over. This has exceptions. Following assets are personal and movable. Personal and movable. Personal and movable. So normally personal movable are excluded, but they are going to be included in the definition of capital asset. Personal and movable, but included in the definition of capital asset. Hey Bhagavan. Understand the confusion. First they say inclusions, everything, but remove them. But following asset, you remove from the removals. Hey Bhagavan. Minus equal to plus. See, understand. These are exclusions. If we are removing from exclusions, that means we are putting in the inclusions. Do you understand? Removal from exclusion is putting in the inclusion. Do you understand? Our government is very smart. Your notebook, pen, calculator does not have probability of increase in value. So they don't want to give you set off of losses. So exclude. But there are some personal movable assets which can sometimes have an increase in their value. Sometimes, at least. We will keep them here. Sada PJ. Sada PJ. Chill. Sculpture. Carvings. Stone carvings, metal carvings. They can be a personal or movable asset. But they have scope of increase in value. Sometimes at least we will keep them. Because if we remove them, then we will not be able to tax you on the gain. Artwork. And there is confusion here, lots and lots of confusion, believe me. Because when we used to go to school, the art class used to be drawing. How can drawing be only art? Think about it. Singing is an art, dancing is an art. Anybody who is not good in drawing was considered bad in art. Arre? You don't know or no? You know or you don't? Art, art, art. Anything can be art. But we have perception of drawing being art. More confusion here because they have given drawing separate. Forget that. They have given painting also separate. Huh? Sir, first question is how to distinguish between drawing and painting. Forget art. If they use watercolor, it is painting. If they use crayons, so it is drawing. If they use those big brushes, it is painting. If they use normal color pencils, it is drawing. How else will you distinguish between drawing and painting? You go to tourist places, you go to Gateway of India, etc. There are these sketch artists. They'll make your sketch. That is drawing. In fact, they also show these sketch artists in crime shows. They ask, the witness, can you give description of the suspect, or let us make that Khuni ka sketch. Bro, I don't understand. How can you see someone for 5 seconds and help the police make sketch? I am 36 years old. I am unable to explain myself for making sketch. Hai. How they do it? The talent is not in the person who is describing. The talent is in the sketch artist. He will give you various options. Bro, so drawing, painting. So what is this artwork? Bas that craft that you did in school. Hello? That is art. Any work of art. Archaeological collection. There are two A's, no? So archaeological collection. In fact, you should be aware there is an organization in India, Archaeological Survey of India, ASI. They keep on digging. I know you must be thinking, sir, that Municipal Corporation of Greater Mumbai is also. They are digging everywhere. They are not leaving any road. Bro. They are making metros, so they are removing roads. Like literally, bro, literally. You must have heard, no, in school, God is everywhere. यहाँ खुदा है, वहां खुदा है, हर जगह खुदा है. जहाँ नहीं खुदा है, वहां भी खोद देंगे. Everywhere खुदा है. You heard all this in school? Have you, bro? No? When the Archaeological Survey of India does the digging, you many a times hear news of some remains of Harappa civilization found, Mohenjo-daro civilization found. We, sometimes have things called antiques. They have high value. Are you aware, once upon a time in India, there was currency note of 10,000 rupees? Then there was demonetization in 1978. And the 10,000 ka note had to be surrendered to RBI. But anybody having that 10,000 ka note today, it can be worth 50-60 lakh rupees today. More than that maybe. And I know you regret all this, sir. You should have told us pehle one note we would have kept. If you ever find a 2000 ka or old 500 or 1000 rupee ka note now anywhere, just keep it with care. You never know, you may get lucky after 20-30 years. It may be a jackpot. In any case, it is of no use. Don't put any stuff inside it, and well, in any case, it is of no use. So let us put some grass particles. No, 1 minute. You know something does not mean you have done it. You know murder is a crime, so you've done it. Just because you have knowledge of something does not mean you have done it. So bro, these old antiques are all in the definition of archaeological collection. And lastly, they have jewelry. So do you understand? First of all, I'll explain the detailing of jewelry, but first understand. Look at these assets. Are they personal? Look, are they personal? You know, sculpture, your artwork, your painting, your jewelry, and are they movable? They are personal and movable. But unlike a normal personal movable like notebook, pen, does this have probability of increasing value? They will keep this in capital asset. But your notebook, pen, t-shirt definitely will fall in value. So that will result in loss. We will not create the loss. But if there is little chance of there being income, we will keep it in the definition of capital asset. I am not saying that your loss cannot take place. Maybe loss can take place. But profit can also take place. No. So that we want to keep. But anything that will definitely be loss making, like your notebook or bag, that we have excluded from the definition of capital asset, so that we don't have to give you set off of that loss. Understood? Sada PJ, sculpture, artwork, drawing, archaeological collection, painting, and jewelry. And as far as the definition of jewelry is concerned, in income tax law, it is required thrice. One in capital gains chapter here. Second, in income from other sources, when we receive jewelry as gift, it is taxable income. Gift is taxable under IFOS. Gift includes jewelry. So we need definition of jewelry there also. And in CA final, there is a chapter called search and seizure. Illiterate people call it raid. In technical language, we call it search and seizure, under which they can conduct search if they have information that you have undisclosed jewelry. So we need definition of jewelry for 3 places in income tax, at least 2 in intermediate. Jewelry does not mean only wearables. Wearables, yes, jewelry, but the definition of jewelry in income tax law is wide, big. At least use this definition for capital gain and IFOS. Jewelry means anything that contains precious or semi-precious. Anything that contains precious or semi-precious metals or stones. Precious or semi-precious metals or stones. Anything that contains precious metal, semi-precious metal, precious stone, semi-precious stone will be considered as jewelry. So yes, your chain, bracelet, Salman Khan fan hai? No, too embarrassing. Chain, bracelet, nose pin, earring, finger wala ring. You know, with wedding it comes engagement ring, wedding ring, ring, suffering. Are these wearables? They are jewelry. But not just they. Anything that contains precious or semi-precious metals or stones is jewelry. For example, rich females, they have this fascination. They have diamonds studded on their saris. What is a sari? A cloth to cover your body, but it will fall in the definition of jewelry because it contains diamonds. You may be having gold plated or diamond studded watch. Watch is personal movable device to check the time. But the moment you have the gold plating or the diamonds, it will fall in the definition of jewelry. Now, at home, you know very well how much respect I have. Before going home, I have to check my message. 2 liter milk, 1 kg, 1 kg tomatoes, I have to bring. If I forget anything, then I have to go back. But in class, I have respect, at least on my face. At least on my face. So I decide to do what? You see this chair? I get this chair removed and bring a throne here, Singhasan, made of gold. And I'll stop teaching. I'll sit one leg over, sorry, you can't see, but yeah, one leg over the other. And Tathastu. Sir, teach us tax. Tathastu. Huh? Baba Siddha kya? Baba Siddharth. See, when you turn into Baba, you have to change your own. You can't use the same. So think of more creative. Sant Surana. But still same surname, no? Baba Siddheshwar Mahadev is already, Siddheshwar Maharaj is already there, no, in Oh My God movie. Kuch aur try. We'll keep a lecture on that. Okay. I remove the chair, I bring a throne, Singhasan, made of gold. Now, I don't tie it around my neck and move around. I don't. It is jewelry. It is jewelry. You understand? Chalo, exaggeration, bro. No one keeps gold ka chair in class. But there are silver utensils in all households.
Old toilet.
I'll come to that. Bed, toilet. I understand your priorities. I'll come to you. First, let me give my example. We all have silver utensils at home. Haan. Mom got at the time of wedding from her family. That also would have made her brothers jealous. Silver utensils, they contain precious metal, no? Or semi-precious metal. They are jewelry. Obviously, no one hangs a spoon here, goes on. No. They need not be wearables. Anything, including a gold-plated toilet commode. If that is what you were asking. And the jet is made of silver. Okay, that also gold. Gold. And flush is diamond studded. किसी का means whoever it is jewelry. So what? Personal, movable, immovable doesn't make a difference. By the way, who told you it is not movable? Matlab, are you trying to say that desktop computer is immovable because it is fixed at one place? Can be removed and installed at another place? Same thing you can do with the commode. Ask your plumber. Building is immovable because we have to destroy it. It can't be ऐसे. You are not Hanumanji. You can't move it. Hanumanji. Ha. Tomorrow tie a commode around your neck and come to class. Bro, please understand. It is movable, and whether it is movable or immovable, it has precious, semi-precious metal or so, it will be kept in nature. You understand? Now the question is, sir, who will buy toilet? Bro, if it has gold, no, someone will buy. Nobody is buying toilet, bro. People are buying the gold in the toilet. What are we discussing, bro? You have better things to do in life. Yeah? Bro, in that वो जो brush है to clean after you put harpic, that brush is made of what? Silver. That is also jewelry. Clean your teeth also with that brush. If you don't understand, let me say it one more time. Chichi. It's sabere kya? He's actually inviting me, sir. Come and see how I do it. I have no other better job to do in life. You do one thing, you do Zoom live from there. Our online students will also join. Wow, क्या मस्त करता है रे. Hello guys. तो आज मैं आपको सिखाऊंगा. Anything that contains precious or semi-precious metals or stones, whether it is your toilet seat or your toilet jet, if you have gold or diamond studded or silver plated, it is going to be considered in the definition of jewelry. Is that clear? Well, you still have some doubt. I am so sure. I can look at your face. हाँ, of course. Thank God you come to a better place now. हाँ, go ahead. Is gold a precious metal? Story over. It is jewelry. You understood? Bro, you've been so disgusting. I don't feel like drinking tea, but I have to. कौन है वो? In your village? Tiles of gold.
Tiles नहीं sir, वो pitch की जो cement बनते ना जाते.
I also know of someone who actually has tiles of gold. That is jewelry. You were making fun of that gold wala toilet seat, but I have actually seen it. I told you, I take private tuitions also, but of course, one student pays the fees of 100. I have been to a house where you enter the toilet and you put the toilet latch. The toilet seat will open on its own. The moment you lock the bathroom, the seat will open on its own. And for cleaning that seat, there are multiple buttons installed. Sanitize the seat, dry clean the seat, wet clean the seat. Wet ke baad mein for wiping, there are buttons installed. And I felt like taking a video, but there was some other purpose why I was there. That was more important at that time. And secondly, if I take the video, whom do I show it to? I had no idea that one fine day, because this was 2015 or 16, so that's 9 years ago. I had no idea that 9 years later I am going to have someone who is talking about golden toilet seats. I would have kept that video. Otherwise, you understand that taking someone's toilet video and then putting it on social media is inappropriate, especially somebody who is paying you crazy for teaching on a one-to-one basis. Okay. But I have seen it physically. So big deal. It is jewelry in case they sell it somewhere. It will fall in the definition of. Is that clear? Bhagwan. Capital gain. Capital gain. These are personal and movable, but will be considered as capital asset. Everyone clear? With this, we get done with definition of capital asset, because this was the last point in the exclusion. So what are we learning, ladies and gentlemen? Capital gain. Two things will happen, then only we calculate. First thing was, we have been given inclusions and exclusions. Now we know anything that is not excluded will be included in the definition of capital asset. Ye correct hai? Everyone? What is your mind saying that I should now do? If you remember how I introduced the chapter to you, then what should I do now? Taxable transfer. Sir, you only told us no 3 things, then chapter over. First, capital asset. That is over. Next. Nah. Taxable transfer is yet some time. So, sir, capital asset is over and you are not starting taxable transfer. Okay, take care. Masega. So, are you playing some antakshari, some game here? What exactly are you doing? No, sir, capital asset ka meaning is over. But we have to do some more research on this thing called capital asset. As a concept, it is not over. Capital assets in income tax law will be divided into 2 categories. Capital assets are of 2 types. So we are still in capital asset. Meaning is over, but there is further discussion. Capital asset will be 2 types. There will be something called a long-term capital asset. Kya bro? Long-term capital asset, that is LATCA. And there will be something called a short-term capital asset. Yes, you are right. That is SATCA. Capital assets will be of 2 types, LATCA and SATCA. Long-term capital asset and short-term capital asset are the 2 classifications of capital asset. On the basis of how much time I kept my funds invested. See, first you acquire an asset. You hold an asset for some time. And after holding one fine day, you decide to transfer. And mark the words. I am purposely avoiding purchased and sold. What did I say? I repeat. Observe words ko observe. Observe the words. I acquired an asset. I held the asset for some time. And finally, I transferred the asset. So, between acquisition and transfer, the period will be my holding period. Period of holding. Some assets I acquire and transfer very soon, immediately. They may be called short-term, SATCA. Some assets I keep my money invested for a longer duration. Of course, small time, big time, short duration, long duration ka definition is there too. But those assets will be long term. Whether I sell my asset immediately or I hold it for a longer period, that means whether my asset is a short term asset or a long term asset, ultimately there will be capital gain or capital loss. There can be capital gain here also and here also. There can be capital loss here also and here also. If your asset is long-term capital asset, then your capital gain will be called long term capital gain, that is LUTSUG. And of course, instead of gain, it can also be a loss. So it can be long term capital loss, that is LUTKAL. So Latka can have LUTSUG or LUTKAL. Hello. And if your asset is short term capital asset, you did not hold it for very long, you sold it immediately, still you can have gain or loss. Such a gain will be called short term capital gain, that is SATSAG, or short term capital loss, that is SATKAL. Latka LUTSUG, Satka SATSAG. I am telling you whatever is there. Some other coaching classes, some other teachers, we are all professional colleagues, they all say Latakji, Satakji. Latakla, Satakla. You know, whatever sound you are comfortable with. I am comfortable with Latka, Satka. The gain. Okay, let's focus on the gain part right now, because ultimately we will pay tax on capital gains. By chance it's a loss. What are we going to do with the loss? You want to guess? It won't come in this chapter. You want to guess in which chapter that loss will go? That loss will go in the chapter set off and carry forward of losses, and that will be used to adjust against other profits. So for the time being, if we ignore the loss part, focus on the gain. Gain in income tax will be of two types. Capital gain will be of two types. There are two types of capital gain which are possible. Type 1 capital gain is LUTSUG, that is long term capital gain, and type 2 is SATSUG, that is short term capital gain. There are two types of capital gain in income tax: LUTSUG, SATSUG. LUTSUG, SATSUG. Everyone? The reason we are discussing this is, if my capital gain is long term, my question is, have I kept my money invested more than normal? Took the bigger risk of holding an asset for a longer duration? Correct? Eh? And therefore, to reward me for the risk that I am taking, understand the logic, nothing is bigger than logic. Am I taking a risk? To reward me for the risk, income tax law will give me two tax benefits. There are two tax benefits given in the income tax law for capital gains which are long term. That means one thing everyone understands: if the same capital gain is short term, then the two tax benefits are not going to be available. Capital gain will be long term, then there will be two tax benefits. If the capital gain is short term, there won't be any tax benefit. And when will the gain be long term? If my asset is Latka, so my gain will be LUTSUG and I will get my tax benefits. But if my asset is Satka, so my gain will be SATSAG and I will not be getting the tax benefits. As a taxpayer, our mind is only thinking about this. Sir, two tax benefits, sir, benefits, sir, benefits. Are you interested in the two tax benefits? But you won't get the two tax benefits unless and until your gain is long term. And when will your gain become long term? If your asset is long term. And of course, your next question will be, sir, when will asset become long term? Don't you think that will be your next question then? For that, they have defined the holding period. That if you keep your asset with yourself for minimum this much duration, then that asset will change its form from short term to long term. A particular period is defined, that the moment you cross this much holding period, your asset will convert from From short term to long term. Your gain will convert from short term to long term, and this will bring eligibility for two tax benefits. So understand the chronology in which we have to learn the law. As a taxpayer, I am first interested in the, I think all of you all are interested in that only, sir. What are the two tax benefits? But do you realize I will get the two tax benefits only if, come on, long-term capital gain. Because in short-term capital gain, the two tax benefits are not available. Now the question is, if for this, I need this, when will I get this? Only if long-term capital asset. And now the last question, sir, when will this happen? This will depend on holding period. The secret of the entire chapter that triggers your tax benefits is the holding period. If my holding period crosses the period that they have given here, so my asset will become long term. Because of that, my gain will become long term, and because of that, I will be eligible for two tax benefits. This is the chronology. First step, holding period. Holding period will make my asset long term. Asset will make my gain long term, and gain long term will result in. So the chronology is simple. This will decide, this will decide, this will decide. This is very, very important, ladies and gentlemen. Extremely, extremely important. I see thousands of students who come at CA final and make a very, very big fundamental error here because their basics are not clear. Because at intermediate, when they learn tax for the first time, they don't have the tendency of taking it seriously on the assumption that direct tax is very difficult. I will manage marks in indirect tax. I will clear my exam. Then we will see. It does not work like that. The moment you give exam only for passing, you are already inviting trouble. Basics are poor. So what I have seen students do, they see the holding period. For example, I sell an asset after 20 years. This is very, very easy to conclude that way. Even if I don't define the timing, no, you can have the brain to understand. 20 years will definitely be considered as. What the student does after this is, holding period is 20 years. Therefore, it is long-term gains. And therefore, I will give the benefits. The student has jumped one step. That step is, the student has not decided whether the asset is long-term. You should not be directly jumping from year to year. If this is 20 years, okay, my asset is long. And therefore, my gain is long. Believe me, supposingly you jump this step, you come here, still 99% cases you will get the correct answer. Because if this is long term, then this is long term. Ultimately, this decides this, no. 99% cases, if you miss this step, your answer will still be the correct answer. Now the choice is yours. Are you here for 99% accuracy or 100%? There will be that 100th case where if you are not clear of this hidden secret of making my capital gain long term, you will make a mistake here. 99% cases, you check the acquisition and transfer or purchase or sale date as people say. You come here, you come here. 99% cases you get the correct answer. But if you want 100% cases correct answer, you have to do it like this. Do not miss this step. Do not skip this step. The real relevance of this step, you will come to know. See what is going to happen after 3 years. To be precise, 1st October 2027. 1st October 2027. You may write this date somewhere down, please. I will be starting your CA final direct tax batch for May 28 exams. In fact, November 28 will also be together. Because in final, we always merge May and November, same assessment. Inter, we can't merge them because one batch gets over, then only other batch starts. See, today, Jan 26 ka syllabus is same as yours. But their foundation just got over. So we can't be teaching them. Their batch will start only after your batch gets over. But final May, it is same assessment year, no? So, 2 attempts ka students are always together. So you will be there. Then your friends from other classes will also be there. I told you to ask about you, And don't hide. You were supposed to ask and bring on record feedback about capital gain. क्या?
वो बोली कि मॉडरेट है चैप्टर, मतलब इसमें बहुत सारी चीजें याद रखनी है.
You don't have to memorize one thing also. You don't have to memorize a single thing in capital gain. Salary you have to 1800, 2400. House valuation का perquisite 10%, 7.5% or 5%. You have to memorize. In capital gain, you don't have to memorize anything. Because you just have to go through the chapter. If I tell you sale of jewelry, calculate capital gain, you have to calculate. Hey, personal movable. Will you calculate? Yes, because exception. And same thing I say, sale of car. Will you calculate? No, because personal movable. You've not memorized. I just gave you the list. Have you memorized? Have you gone through again and again? Have you spoken sculpture, artwork, drawing, archaeological painting, jewelry? No. Still I asked you a question and you are able to say when you will calculate, when you will not calculate. You need common sense. Capital gain requires only common sense, but common sense is actually rare sense. Most people don't have it. So basically final CA ka that same batch, your friends will also be there. Your friends have to be there. Plus your next attempt ka. So you are May 28th. There will be students of November 28th also sitting in the same classroom. Again in that batch also there will be students from other coaching classes. And believe me, my student who has studied inter to comes fix only. But at final, the number of students is generally twice, thrice, 4 times, 5 times of the people that I have taught at inter. I get a huge number, about 70-80% of students in final C are someone who has studied inter else. Content hai na bro. When they say these books, I know it for sure that some of your friends are actually using our second book for their question answer practice. Some friends are very generous. They end up giving their book. I am studying IDT. You solve your DT from this book till then. You be generous. I have got no problem. But ultimately, you are creating competitors. You're bringing them in the CA final lecture. Then share your book. Then no problem. So all those students come and join at final CA. So basically, final CA ka classroom are, the number of students, the students in the class are divided in two categories. Those who have studied inter from me and those who have not. So I first asked the other students, when does capital gain become long term? Listen, huh? That's my first question. Because everyone knows that long term has two benefits. Today ka I can say, tomorrow ka I can't. Today is 31st January, tomorrow is the budget. Today ka I can say with confidence, tomorrow ka I cannot. Long term capital gains brings two tax benefits. So for that, the gain has to be long term. I asked those other students, Bolo, when will gain become long term? Some say if the holding period is more than this much, if the holding period is more than that much. Holding period for different assets, they have given different period. So they start saying all the periods. Then my capital gain will become long term. Rubbish. Nonsense. Holding period nahi. Then I will tell that student, okay, wait. Then Bhakti will be in the same class. I will tell you. Tu bol. Now listen, if on that day you don't give the answer, so you won't lose any respect. Why? She will say, why? Heavy nahi. Because you don't have. Who will lose respect? I am very confident on you. I am overconfident. I am saying that students who have been with me in inter will know the answer. So now we will have to learn some secret gestures. You can secretly say, sir. Or you can, if by chance I am looking at you guys, to pick up at least one of your, shall you give the correct answer? Aisa. If it is yes, then you do it like this. Sir, itching. And if it is no, sir. So that I know I don't have to ask you. Because bro, if I ask you and you give the wrong answer now, I again repeat, you won't lose any respect. Because you don't have also. You still have some respect today. At that time, by that time, you will lose all your self-respect, because between today and that day, you will have articleship. Articleship is basically that event of losing self-respect. Believe me, है ना? But for now, we'll summarize the answer that we have to speak in front of the others. If I ask you, when is capital gain long term? If asset is long term. When is capital gain long term? If the asset is long term, the capital gain will be long term. Then I may probably ask you, when will asset become long term? But the answer to this is not this. The answer to this is this. Is that clear? So chronology, bro. We want two tax benefits. When will we get those two tax benefits? Long-term capital gain. When will we get long-term capital gain? Long-term capital asset. And when will we get long-term capital asset? Holding period we will have to check. So I am now going to be teaching you answers to 3 questions. Question 1 will teach us, when will our asset or our gain become long term? When will gain become long term? When asset is long term. Now then the question is, when will asset become long term? That is, what is the holding period? If I know this, then can I say I now want to know the two tax benefits of long term capital gain. So first benefit, second benefit. So 2 questions. Question 2, question 3. Question number 1, when will I have long term capital gain? Question number 2, what are the two tax benefits if I have long term? You understand? So obviously 2 and 3 can be studied only once you are aware of question 1 ka answer. In question number 1, our question, ladies and gentlemen, when will capital gain become long term capital gain? Answer. If the holding period is no, if the asset is long term capital asset. This answer, if you don't give at final no, so you won't lose respect. This is that answer. This is where we want to make your basic very, very strong. See, understand. Even if you don't know this, you will have 99% accuracy. Now it comes to your human tendency or your mental state or mental tendency. Okay, sir, even if I give this wrong answer, still 99% I will get no. So to hell with it, no, sir. You only say no in C, 100 out of 100 is not possible. Hello? To leave. है ना? नहीं, bro. What if this 99 and 100 का difference is the difference between passing and failing? Is it possible? Supposingly group 1 का total is 151 and group 2 का total is 149. So this 1 mark is basically deciding that you have passed both groups. You understand, not? If individually I have scored 50% here, but this group I am failing. But because I give both of them together, my total will be considered as 300 out of 600. I have seen people passing like this. In that, now understand, there are 3 papers. You have to make this 151. This is 16. This is 61. कितना हुआ टोटल? नहीं, 51. कुछ समझ ही नहीं आ रहा. This is coming to 40. अच्छा तो रुक. Have you failed? Yes. Supposingly it was. Have you passed both groups? Why? Because individual subject done. And aggregate we won't check of the group. We will check of both groups. Is the total meeting your 50%? Now supposingly this was 39. In case. So this will become 150. You have the aggregate of 50% here. Still, you have failed this group. Why? Because of this 39. Bro, you failed this group also. For a matter of 1 mark, you have failed both groups. Had this been 40, you would have passed both groups. I have seen mark sheets like this. My father once told me a story about his hostel friend. My father came from Rajasthan to Mumbai to pursue chartered accountancy. Then he left midway, so I had to complete it. He said in his hostel there was a friend who gave the accounts ka paper, first paper, CA final. And he said, yaar, paper was not good. I will leave this attempt. Next time I will give because I want rank. I won't give exam because with this paper I won't get rank. I might pass, but I won't get rank. And I want to give CA only to get rank. He didn't give that attempt after the accounts paper. He's still not a CA today after 50 years. He did not clear only CA final exam after. He's practicing as a company secretary. Don't be stupid. Don't be stupid. Okay? Don't target 99%. Accuracy, you have to target 100, but be mentally ready that I will give my 100% so that ICAI at least gives me 50%. Like a deep statement. You give your 100%, institute will give at least 50%. You don't give 99%, then institute will give you 49.5. Okay, mentally accept you'll get half of what you give. Like for example, I work so hard, but I get only half of what I do. My remuneration is only 50% of what I deserve. We have to go together for a protest. Protest is not going to be increment of 10, 20. If it is double, it will match it. It will match the time and energy. But life lesson, you give your 100, you will get 50. So you can't be targeting 99% accuracy, at least with me. ये clear है? हाँ, तो ladies and gentlemen, if your asset is long term, then your gain will be long term. And if your gain is long term, you are going to be eligible for the 2 tax benefits. So our question is, when will my asset become long term capital asset? My asset will become long term capital asset if my holding period is greater than 36 months. Any asset will become long-term capital asset if the holding period is greater than 36 months. Taxation wants you to understand what is written and also understand what is not written. If it becomes long-term after 36 months, that means if it is less than 36 months, what's your answer? Short-term. Very smart. But this is CA. They will not ask you greater than 36. Supposingly 40 months, lol, long term. 20 months, lol, short term. They will ask you 36 months. Less than or equal to, both will be short term. Bro, understood? Less than equal to, both will be considered as short term. Any asset will become long term if the holding period is greater than 36 months. So less than 36, short term. Equal to 36, short term. Now if you hold an asset, now the picture will become clear. So one thing please understand, when you are asked this question in CA final, I am be mentally ready going to ask you this question when you are in the CA final batch. When will gain become long term? When asset is long term. When will asset become long term? I don't want to hear 3 years. It is 36. I understand 3 years is 36 months, but in the law they have said months. We will also speak in months. More than 36 months. Then I will say, where will equal to go? Not now. Say it after 3 years. Not actually 3 also now. Less than 3 in fact. Because October may we start the batch. Fixed timetable, fixed schedule. 2 places in Mumbai I take CA final batches. One is July, August, September. slot at a faraway place in Mumbai, which you may not be aware also, because you all are the so-called townside South Mumbai people. And the second batch, which starts in this part of the city, is 1st of October. So that part, 1st of July, August, September. This part, 1st of October. Write this date. Hey, you write on your hand with pen, no? That will go away. It's a notebook में write. 1st October 2027. Sir, so date we understood. Same classroom. Sir, अभी उसका तो what do I say now? As of now, what is happening? देखो, in CA coaching faculties, no, last couple of weeks, last few days, you are aware, we are all in auction. You know, bidding is going on. Bidding is going on. Base price, no problem is my base price is very high. So not everyone can afford. But there is always going to be some Mumbai Indians who can afford any player. So between this date and that date, you never know. Auction, you know, IPL auction players change every year. So in that auction, which team that player is, that you find out at that time before betting on that year's IPL. I think you got it now.
Yes.
In code language. So you please confirm with me once that this projector is the projector in which I will learn when I am in final. This projector is most important, or this is more important. If the projector, ye na. So I obviously won't be removing the projector. Take a call. Okay, ladies and gentlemen, for now, write the date and focus on your inter ka exam, because you will be eligible for 1st October 27. If you clear inter, I won't say if you clear inter in May 25, because those who clear in September 25 or Jan 26 will also be in that class, because their attempt will be May 27, November 27. So we can peacefully clear till September or Jan also, correct or no? But 2 tight slabs, pokal bamboo I will give you. You have to clear and clear now. Is that clear? So ladies and gentlemen, at that time don't say yours. And second, at that time remember where will equal to. When will an asset become long-term asset? If the holding period is greater than 36 months. So less than 36, short term. Equal to 36. But every law has an exception. And capital gains has too many exceptions. We've already seen, right from the definition of capital asset, they said inclusions, everything except the following. In exclusions, they say personal movable, but except the following. So sometimes your asset will become long term if the holding period is greater than 12 months. Means we are not keeping constant rule for all assets. Some assets we have 36, but some other assets we have 12 months. That means, can I say if my asset falls in this list, then less than or equal to 12 will become. Please understand, normal rule 36, but some special assets will go in 12 months. Whether 36 or 12, greater than will become long term and less than equal to will become short term. There are 3 assets that they have given in this list. Means 3 assets will become long term after 12 months. Everything else will become long term after. I have a very, very easy option. A, B, C. 3 in 12. The question is, why? And here is the logic. Just understand the following sentences. Are these assets falling in 12-month list? Means will these assets become long term earlier than other assets? Means will tax benefits come earlier than other assets? Our government wants to promote, encourage investment in these assets. And how are we encouraging investment in these assets? By making them long term faster than others, by giving you the tax benefits earlier than others. You understand? Our government is promoting these assets. So normal rule is 36, but these assets 12. Of course, it is greater because less than equal to all are short term. So these assets government wants to encourage. Is it clear? What are these assets? First, listed securities. Now what happens is students come to CA final. Again, when I ask, sir, when does gain become long term? They start saying, sir, sometimes 3 years, sir, sometimes 1 year. Ye pagal. I say, first of all, 3 years, 1 year is not written in the law. Law says 36 months, 12 months. Then they say, okay, sir, sometimes 36, sometimes 12. Then I ask, equal to? Equal to is short term. One by one, I eliminate students. Squid games. You've seen Squid Games? Those who lose the game one by one, you remove them. There is someone who is still very confident. Bola, no, sir, greater than 36 is long term. Less than or equal to short term. Greater than 12. Then I ask, in 12, what comes? This is, sir, equity shares listed on a stock exchange. But, sir, all types of shares and securities. But, all listed securities. Listed equity shares, listed preference shares, listed bonds, listed debentures, listed government securities. They all will come. So those who say equity shares are wrong because all securities come. Those who say all shares and securities are wrong because unlisted does not come. Unlisted will go in 36. Think about it. Hello, listed securities. And then finally I tell them that, bro, you are still wrong because my question was capital gain and your answer should have been long-term asset. Then I would have asked long-term asset, so you could have told me 36 or 12 or whatever. Everything that you have spoken is wrong. At final CA, I have to spend the initial time of my batch to convince the students that they don't know anything in tax. Problem is that students come with overconfidence. Sir, tax, so I will manage, sir. Tax is easy. E.g. Basics have to be good. So listed securities. Securities that are listed, traded on a stock exchange. You understand, trading on stock exchange is basically risky. Why? Bro, some are reacting by saying, sir, don't ask, we feel scared to open the app also. Last few days, it has all been a dip. Dip in the Holy Ganga to wash your sins. Dip in the stock market to wash your savings. And what deep seek to wash artificial intelligence. Bro, artificial intelligence killed artificial intelligence before it could kill human intelligence. Deep seek, you are aware or no what is happening? Replacement to chat GPT. If your generation does not understand all this, so bro, you are outdated. I'm telling you. And I stick to the statement, I am more Gen Z than the Gen Z. You are aware of what is happening? Chat GPT. Now, then yesterday, India's information and broadcasting minister, who happens to be the railway minister also, actually announced that India will have its own artificial intelligence. Remember this statement, your children are going to do jobs which are yet to be invented. If you do not change with time, if you don't change your knowledge as per time, you will be outdated one time. You're not aware of anything? Huh. So let's talk about stock market. Stock markets, it is dipping and dipping day by day. Strategy, bro, strategy. Sell, bring it down at that ridiculously low price, make the purchases, make favorable announcements in the budget. Markets will go up. Two benefits. Benefit number one, you will make profits. Second, government can claim, see, our budget brought the stock market up. Stock market has to go down below before the budget. Otherwise, how will we bring it up? We have to bring it up after the budget. So you have to first throw it down so that it looks like it was a good budget. The definition of a good budget or bad budget is basically what happens to the stock market after the budget. And surprisingly enough, budget is coming on a Saturday. The effect will be seen only on Monday. Which also brings me to very, very important discussion here. Tomorrow my lecture will be 1 to 5. 1 to 5. I will be reaching the branch at 11 o'clock only. I will be sitting and watching the budget. Anyone wants to join me can join. No problem. Tentatively, we will start at 1 o'clock on the assumption that by that time, auntie will finish her tax proposals. See, if I change the timing to morning, so things are going to be difficult because you all have evening class. I don't want to make you sit, for 4-5 hours in between. And if I finish the budget at home and then I come to class, so there will be unnecessary 1 hour break in between because I have to travel, I have to come and set and install my system. I will come to the class before the budget, install the system, and then put the TV on and watch the budget. You may join for your reactions if you want. And immediately after the tax proposal parts get over, that I told you, in my beginning, that there are two parts. First, the macroeconomic part, and second, the tax proposals. Once that gets over, we immediately will start the lecture. So the tentative timing is going to be 1 to 5. If by chance the taxation part gets a little delayed beyond 1 o'clock, there may be about 10-15. It basically, everyone watch the budget. The moment you see that her taxation part is over, be mindful that once that gets over, I'll just bring the tab to the classroom, install the tab, start the software, and we'll start the lecture immediately. Okay. So with that, you also don't have to come unnecessarily too early. Immediately after me, after half an hour break, you will have your IDT class. And I won't be missing that budget part. Also, on budget day, I never take lecture. Never. Historically, I have never taken lecture on budget day. Y'all are probably, or maybe if I take that late evening wala lecture. Your problem is that evening ka schedule cannot be adjusted because of your fixed timetable of IDT on weekends. And I can't cancel your lecture. Cancelling your lecture is the biggest risk of my life. Bro, it is riskier than investment in stock market. Futures and options are safer, right? So that is the last thing on my mind, cancelling your lecture. This is one thing. And as far as your Monday is concerned, I'll tell you now only so that you are mentally ready. Tomorrow we have 1 to 5, but 1 can be little plus minus, because we will wait for the tax part to get over and immediately start thereafter. I am hoping by chance she gets done early, no? So, you be mentally ready. So, y'all, I request you that if possible, y'all come only before time, like 11 o'clock ke aspas. We'll sit in the TV room and watch the budget live together. And immediately after that, we will come and start. So, it is likely that 12:30 also it gets over. You please make sure that by that time, so at least you are here only in class. So, bro, you come considering 12:30 only, not 1 o'clock. So whenever it gets over 12:30, 12:40, 12:45, within 5-10 minutes, we set the system and we start. You all also do the same thing online, that you all be in touch at what time the budget speech is getting over. Even if it is 12:30, then we may start at 12:35, 40, 45. When it is getting over and I am setting my system, I'll just send one message that we are starting in 10 minutes. Okay. So that we don't waste any time. But worst case scenario, I believe by 1 o'clock we will be able to start. And Monday, I will be taking lecture at 7:30 in the morning. 7:30 in the morning. So Sunday evening your IDT lecture gets over at 9 o'clock. तो बस sleep here. तू क्या हाँ करके you have to cross the road and come. क्या 7:30 to 11:30 will be my lecture Monday morning. And after my lecture, what lecture will be there on Monday, that you will be informed. I am giving you timetable of my lecture for Saturday and Monday, only 2 days. I am adjusting. See, immediately after budget, what happens is there are so many industry organizations, trade organizations who need someone to guide their members on the budget proposals. And therefore, the 1 week after the budget, there are so many invitations to go and speak on the budget proposals. While we understand that these are proposals, they may not be final. But trade bodies are like this, no, this is fresh, this is the talking point, so we want to keep something on it. I get invitations and I still don't want to cancel your lecture. Now my 2 options are, either I deny that invitation or I cancel your lecture. I won't do both. I will not deny anybody's invitation because that creates my network. I just have to go and speak there for 1 hour. Thereafter, there will be contacts who will be contacting my back office. Their files will be worked upon by my office, and I can peacefully come and teach you. You should always have multiple sources. So I'm not going to let go of that opportunity. Had it been, 1 day ka stuff or matter, I would have still cancelled your class, but I am not going to cancel your class. Also, that is also not a possible thing for now, at least. Because when we had that unnecessary gap, my whole target was to finish your syllabus by the 8th or 9th of January. 10th of January, I am traveling. 10th January, February, sorry, my bad. 8th or 9th of February, 10th Feb, I am traveling. Abhi, as of now, I am aware that by that 8th, so your syllabus is not going to be over. I am only out for 2 days, but now I am scared for that also. Nothing else to be started now. So, I go and someone else starts his or her syllabus. Nothing. So only 2 days, 10th and 11th, I am not there. 12th, I will resume. I have a wedding in my family, but you are my priority. So except those outstation days and except those wedding days, I am going to not cancel any other lecture for any other reason. Are we clear? So in any case, you have been coming and attending morning lectures. Why not? So 7:30 and 8 o'clock is one and the same, bro. It is all one and the same. Where do you stay? Where do you stay? Prabha Devi. You can come walking in 5 minutes. 2 tight slaps you will get, no? Chalo, let's have a challenge today only. How much time it takes? 15 minutes, no? Oh, 15 minutes. So Prabha Devi say, why you come walking? Come to Dadar and come walking. Huh? तो नो प्रॉब्लम. तुम्हारा काम करो. I'll talk to her. Okay. By the way, what made you think that I am asking that can I keep? You thought that I am asking you? नहीं नहीं ना. 7:45. Bus. Not you, not me. Now you don't come at 7:46. Okay. This only I am doing because of the discussion that you are. I don't like to see sad faces. Bus. You check for the earliest time, whatever it is. You've been coming for 8 o'clock lectures, no? For so many days. So see, 15 minutes. In my lecture, you don't have that option. In case you are not aware. है ना? So you please make sure. You want me to give you a wake up call in the morning alarm करके? नहीं. You want me to call any family member that please wake her up? नहीं. Because if I will call them and tell them that you will be late, then that you will face whatever at home, I will not be responsible for that. So please make sure self-discipline is better than forced discipline. I was going to keep 7:30 only because 2 o'clock I have to reach the venue. So I will have to go home, change, go to that venue, which is again half an hour away. And I don't want to reduce lecture duration also. So I am still respecting your sentiments and changing the time to 15 minutes later. Bus. No further discussion. Tomorrow 1 and Monday morning 7:45. Only 2 lectures I am adjusting. All other lectures will be as per the allotted time slot of 12 to 4. Only moving forward, in the next week, if your other lecture is before me, so I might be having an extension of 15-20 minutes, half an hour on a daily basis, so that I can cover up a little bit of portion that we have. We are already lagging for the loss of time that we have had, only because first your FM did not get over, then your law did not get over. Now nothing is getting over. Only now what do I do? Okay. So I can't take any chance. And you also please don't take any chance. Or what is the other option, sir? Don't take lecture on Monday. You think that makes sense? It does not. Okay. And वैसे I had one more idea, but I am not giving it. 7:45 Monday morning, topic over, and 1 o'clock tomorrow. 1 o'clock मतलब not literally 1 o'clock. You be here by 12:30. Whenever the tax part is over, we will start. You come at 12 also. You come before that also. Classroom is open. Infra is available. I will be to 11 o'clock onwards. I will be watching the budget here only. Join me if possible. Choice is yours. This is not a Saturday evening that I am inviting you for a party. It's a Saturday morning and national budget. And I'm not sponsoring anything, whether morning or evening. You want to come for knowledge, you come. Otherwise, you come and sit in the classroom, do your self-study. The moment the tax part is over, we are going to start the lecture. So we don't want to waste time or lose time. All this planning is being done so that we are able to accommodate everything. Bro, you come at 11 only. You better come at 11. नहीं सुबह नहीं. Do one thing. At night you sleep here only. ठीक है? Bed, toilet, everything we have. Done. Stock market is risky. Securities which are traded on stock exchange have their values going up, down, up, down, up, down, up, down, up, down. See, if I am an investor and every time the market goes up, down, you understand? Up, down, up, down, up, down, up, down. Dug, 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 dug. Am I taking a risk? And to reward me for that risk, government is going to make my asset long term after 12 months. Unlike a normal asset which becomes long term after 36 months, this will become earlier than others. You understand? Because of the risk taken. And government wants me to take that risk. Also understand. If I buy equity shares, if I buy debentures, if I buy preference shares, will company get funds? See, at my individual level, I may not be able to do a big scale business. But when a company gets funds, especially the public issue part, with that fund, the company will be able to do much better business than what I can do at an individual level. So government wants that your funds get accumulated at a place where people have business acumen, which will contribute to all the macroeconomic concepts like GDP, growth rate, employment generation, all those things which you left in option in economics. Macroeconomics you left in option. Ultimately in economics you got marks because of law of demand, law of supply, law of diminishing marginal utility. Had it not been for Sir Alfred Marshall, you would have always failed in economics. Hello? So we want that you contribute to companies so that companies contribute to GDP growth rate. We will encourage. Are we clear? And we will encourage how? By making this long term after 12 months. Understood the logic? After today, you have to learn only the law. When will gain become long term? When the asset is long term. When will asset become long term? Holding period greater than 36 months. So less than 36, short term. Equal to 36, short term. Sometimes greater than 12 months. Case 1, listed securities. Case 2, units of equity oriented mutual fund. All right, ladies and gentlemen. In order to understand what is this asset which is becoming long term after 12 months. See, we want to know the logic of applying 12 instead of 36. So for that, we will need to know what is this asset, what is unit. For knowing what is unit, we will have to know what is equity oriented mutual fund. And for that, we will have to first understand the meaning of mutual fund. So my question to you is, what do you know about the term called mutual fund, except the fact that it is subject to market risk and you have to read the offer document carefully before investing? Mutual fund sahi hai. Pool of funds. मतलब small investors will invest small amount of money. I understood that much. Go ahead. Some asset class. Pooling of resources. Supposingly the market has some investors, A, B, C, D, E, who are interested in investing in the markets, but no knowledge. फेंक के मारेगा. क्या बोला? Say it again. Say it again, नहीं तो I will hit you. Duryodhan, listen. Understand, this is the Gada and Janga तोड़ूंगा. What did he say? अंगूठा छाप. Exactly. Us moment. As far as the stock markets are concerned, these guys are illiterate about the stock market. No knowledge. They want to invest. They have disposable funds. And stock markets that way generate good returns. There is no better asset class than equity to generate returns. But of course, with the risk involved. At the same time, in the market, there are some organizations. X Limited, Y Limited, Z Limited, R Limited, Q Limited. These are good companies. If they get funds, they will be able to do good business and be able to share good returns to their investors. If they go and directly invest in these companies, can I say they will buy shares here? Anyone investing in these companies will be getting the shares here. They will be called the shareholder of the company. So they have purchased shares and company will give them dividend. Purchase of shares, give them dividend. But this is not happening for reasons. Reason number one, they don't have knowledge of whether it is a good company or bad company. Without knowledge, if you go and invest in stock market, see, you all are chartered accountants. You all know how to read balance sheets. You all know what is EPS, earning per share, what is MPS, market price per share, what is PE ratio, MPS upon EPS. High PE ratio means the share is overvalued, do not buy, it is selling time. Low PE ratio. PE ratio is that, no, the share price compared to the earnings. What is the beta of this company? Risk. What is the beta of this company? Different types of valuations of securities. You all have studied all that. Not everyone has knowledge. If a CA literally uses his theoretical financial management and advanced financial management in the stock market, CAs can make more money than anybody else. And go check who are the people making maximum money in the stock market. Go check the degree of late Rakesh Jhunjhunwala sir, or go check the degree of Motilal Oswal sir, or go check his main person in the organization, Motilal Oswal, Ramdev Agarwal sir. Go check what are their education. Anil Singh is the G business editor, who basically always gives a stock market knowledge. Go check what is the educational qualification of all these guys. Anand Rathi, go check, no. Go check. Kotak Securities MD, Nilesh, something like that is Nilesh. Shah. Go check what are their educational qualifications. People making maximum money in stock markets are chartered accountants. Difference between us and them is they have acquired the knowledge just like us. They have used that knowledge. But these people don't have that. So they can't go and directly invest in the company. Do you understand this? And second, they have limited funds. If I go and invest in one company and this turns out to be bad, so I will lose my wealth. There is a simple policy: diversification reduces your risk. Never depend on one source. Never depend on one source. Finance में monetary part में आए, talking about not personal life and human relations. See, as a chartered accountant, I am today not dependent on one activity for making money. In fact, if I am doing multiple activities also, for the multiple activities I am associated with multiple. Because I have that kind of attitude that no, this is not working. Sorry, I am not comfortable. I'll pack my bags and leave. My way or the highway. I will never go against a person or organization. But if you do anything that I am not comfortable with, which is not good in the interest of the organization, I will pack my bags and leave. And what if I am doing or working only with one organization? Then pack your bag and leave where? Himalayas? Right. If I resign from any of the organization that I am working with, I still have something to fall back upon. Diversification reduces risk. So we suggest you to buy little bit in all the companies. But if you buy little bit in all the companies, you need that much money, no, bro. You don't have that much money. For this reason, unfortunately, they are not able to invest. So neither the investor ka funds are being used, nor the company is getting money. To make the two meet, to act as an agent between them, like Bharat Matrimony, like Shadi.com, there will be an organization called mutual fund. All the people who want to invest in the markets, deposit your funds here. Pool your resources, deposit them at one place, that is mutual fund. The mutual fund will be run by fund managers who have knowledge of the market. They know which company is good, bad. They know how much to invest in which company. They know how to diversify. They know everything about the markets. Most of them, again, chartered accountants. When you directly go and give your money to the company, company will allocate you shares. You will be called owner of the company. Just like the capital of a company is divided in shares, the mutual fund will also be having balance sheet. Liability side, it will be having capital. This capital is divided into an asset called units. Just like I go and buy shares in a company, in a mutual fund, what am I doing? I am buying units. This mutual fund, against the funds that I am depositing here, will allocate me something called units. The investor will now be given a fancy name called unit holder. Just like shareholder purchases shares and becomes owner in a company, unit holder purchases units. Unit is basically shares in mutual fund. Purchases units and becomes unit holder, that is owner in a mutual fund. That means, can I say multiple unit holders will buy the units, become unit holder, that is owner in the mutual fund, and now where are all the funds of all these investors? Mutual fund. This mutual fund, which is now flooded with funds, will invest their money in different companies and different asset class. Equity shares, preference shares, debentures, bonds. Some of them buy currency, buy dollar now, we will sell later. Buy shares now, we will sell later. Buy debentures now, we will sell later. Money market mutual fund, equity oriented mutual fund. Some buy properties, buy now, sell later. Real estate investment trust. That means, can I say the mutual fund is basically investing money on your behalf further in the market? From the market, they will be earning their profits. The profits can be earned in the form of dividend if you purchase shares, interest if you purchase debentures, rent if you purchase property, profit on sale of those shares, debentures, property, currency. Who is earning the profits? Mutual fund. And one fine day, the mutual fund will give that profit as distribution to its investors who are unit holders. And you have my permission. You call this dividend received by unit holder from mutual fund. Just like company gives a share of profit and we call it dividend, share of profit of mutual fund, we call it dividend. Dividend paid to unit holder. Company will pay dividend to shareholder. Mutual fund will pay will pay dividend to the unit holder, because here they are the owners. So basically, the idea of a mutual fund is investor will invest, mutual fund will invest further, earn profits from the market and distribute it to the unit holders. Invest, further invest, earn profits, distribute. That is the whole idea behind mutual funds. If we directly come here, we get shares and we directly get our dividend. But there is a risk associated, because if I buy one company ka shares, that company becomes insolvent, I will lose all my money. Mutual fund will be able to diversify. When mutual fund invests in so many companies, it is going to make profits from all the companies. If one of these companies becomes insolvent and this wealth is lost, still we have this. At least it won't become zero. Mutual fund basically gives effect to that statement: diversification reduces the risk. So now we know what is mutual fund and what are units in a mutual fund. These mutual funds, as I have been explaining, are of different categories, different types, and that depends on the class of asset they are making investment in. Mutual fund can go to the market and invest in these companies and buy something called their equity shares. Such a mutual fund will be considered as equity oriented mutual fund. But there is another possibility that this mutual fund, is it taking all your money and investing in these companies? These mutual funds are investing in debentures, debt, bonds. Such mutual funds will be called debt oriented mutual fund. If you buy equity shares, we call you equity oriented mutual fund. If you buy debentures, we call you debt oriented mutual fund. Is it possible you are buying currency? We will call you money market mutual fund. Is it possible you are buying real estate? We will call you something called REIT, Real Estate Investment Trust. Based on the class of asset you are making investment in, we are going to define the mutual fund. SEBI has laid down separate regulations for all. It will depend on the nature of investment that you are making. It will depend on the nature of investment that you are making. You understood? That means any mutual fund which purchases equity shares will be called equity oriented. Any mutual fund which purchases debentures will be called. Now please come back. At the end of the day, it is the choice of this mutual fund what kind of mutual fund I want to become. As an investor, listen to this also. You will be told in advance, sir, I am equity oriented. That means where will I invest your money? Equity shares. Sir, I am debt oriented. Where will I invest your money? Now you investor, you decide what is your risk taking appetite. Because one thing everyone understands, that equity has got more risk than debt. Debt, no, virtually has no risk. Use your brain and understand. This is basic of commerce. Debt, you get fixed rate of return, fixed amount of redemption, fixed date of redemption. Virtually there is no risk, but equity is risky. So if this mutual fund is going to buy equity shares with my money, that means my money is going in a risky area. But if this mutual fund is going to buy debentures with my money, there is no risk. So equity oriented mutual funds are riskier than debt oriented. Okay, bro. So equity oriented mutual fund will become long term after 12 months. Logic. Listed securities will become long term after 12 months. Equity oriented mutual funds, because they are investing my money in equity shares. You understand? I am buying units here, and with that money they are buying equity here. So if they are investing my money in risky places, my unit ka value will also be risky, no? If equity ka value increases, my unit ka value will increase, and if market will collapse, so my unit ka value will decrease. But as against this, if I buy in debt oriented, so what will they buy? Debentures. That debenture ka value will not fluctuate only, so my unit ka value also will not fluctuate. And therefore equity will become long term after 12 months, but others will become long term after. And after this second point got added in the first point, then it was specifically mentioned that this will exclude units. Sir, why? Because units are separately covered. That means what will be our first point? Equity shares, preference shares, bonds, debentures, government securities. If listed, then 12 months. If unlisted, then 36. At least till now. Later that will also change. More data coming up. But I will keep units where? In point 2. In units, I will see equity or others. Equity will become long term after 12. And debt oriented, money market, real estate, they will become long term after 36. Understood? Bro, everyone. Normally, an asset will become long term after 36. But some assets will become long term after first asset, listed securities, which will exclude units. Because units are covered in second point. Units of equity oriented mutual fund. And third, last case of 12 months. Last case of 12. Achha, by the way, remember, in all the cases, equal to will go in short term. Equal to will always go in short term. Real estate investment trust doesn't matter. It is not equity. No, see, anything other than equity is all same. Even if I remove this from there, isn't this much enough to make you understand that anything other than equity oriented will go in 36. Real estate investment trust, in case you are interested, doesn't matter. Okay. Third, ZCB. RCB nahi hai. RCB, they always lose. Bro, we Indians, no, when will we stop hero worship? I don't understand. We are saying, wow, he is playing Ranji Trophy. The full stadium is filled. Bro, The real person who deserves credit for this is Pat Cummins. He has sent all Indian superstars to play Ranji Trophy matches. They are playing Ranji Trophy domestic matches after 10-12 years. 1 century they will hit, no, then for 2 years we will worship them. When will we get rid of this hero worship? Lol. Sorry to offend hardcore fans. But by the way, you should be ready to do it. You are the boss in your office. If there is any emergency and near your desk there is a Xerox machine, but your staff is somewhere not available, so in the emergency you will not go and take the Xerox, no, because you are the boss. No, you are the boss. Why will you take Xerox? Let the emergency work get postponed. Wait for the staff. You will take, no? So cricketer playing Ranji Trophy is not a big deal. Their job is to play cricket every day. Lol. So it is not that RCB. RCB. This is what? Zero coupon bond. Zero coupon bond. Any idea what this is? No? Whenever you invest in debt securities, say 8% debenture, 10% debenture, that is rate of interest. It is known as the coupon rate, in case you are not aware. So what do you mean by zero coupon? No interest. So investor is a pagal. Huh? If you don't get interest, why you are investing? You understand? The reason is these bonds will always be issued at a discount and redeemed at par or premium. To explain anything further, you first need to know what is the meaning of issue at discount, redeem at par. What's up, you know? Because all this, if you don't know, I won't do anything to you. I'll be the postman. I'll pass on the information. You all know what is issue at discount? For example, if the face value of my bond is 100 rupees, so my issue price should be less than 100. So at what price I have acquired the bond? My issue price is my purchase price, no? 90 rupees. And do you realize redemption price for me as the investor will be selling price? Redemption will be at par. Par means 100, or maybe premium means 100. So as an investor, I have to buy this bond at 90 and sell this bond at 110. The company is not paying me interest during this bond period of 20 years. But on the date of redemption, the company will give me full profit. For the company, this 20 becomes like, indirect way of paying interest over the years. But for me, the investor, this simply is capital gain. You have to understand, because issue price is purchase price and redemption price is selling price. This is going to become long term after 12 months. So first we had to know what is zero coupon bond. Bonds which are issued at discount and redeemed at par or premium, face value or premium. Am I definitely going to make profit at the time of redemption? That profit will become long term if I have held it for greater than 12 months. So the question is why? First two, risk involved. Now for the third thing, only knowing the meaning of ZCB is not enough. We will have to do little bit of background research of this concept. In our country, all companies are not allowed to issue ZCB. Just imagine if they start allowing all companies to issue ZCB. Idea. This company is offering bond at 10% discount. No problem. I will give you 100 rupee bond at 50 rupees. Buy my bond. Right now you have to give 50. Bro, I will redeem at 200, sir, 4 times. But that will happen after 20 years. Right now you have to give me 50. 20 years ke baad you come, please come, I will give you 200. After 20 years. Bro, after 20 years you won't find me only. Bro, forget 50, no, I will issue you 100 rupee ka bond at 10 rupees. Right now you have to give me 10. Give 10, we will see later. So all companies can't be permitted to do this. In our country, companies which are in infrastructure business. Please understand. Infrastructure, roads, railways, bridges, metro, monorail. Such companies are allowed to issue these bonds. I'll tell you all the logic. Such companies will be allowed to issue these bonds. Problem with infrastructure sector is heavy gestation period. Common sense use kara, please. You know what is gestation? Time taken to make profits. Starting mein you will suffer losses. You will make profits in future years. In infrastructure, that time is very, very high. Very high. Sir, there is reason behind it. Please understand the reason. Supposingly, we are making one bridge. You know, cable bridge over a sea. So that bridge will take 15-20 years to get constructed. During that construction phase, of course, we will have our expenses. Material cost, employee cost, telephone, traveling, everything. But we won't have any income. Income will be toll. Toll will start only after bridge is ready. We can't tell people half bridge is ready, pay half toll and then swim and go. Full bridge has to be ready, no? But that much time, if we don't get revenue, the people will not invest, and that is why the condition of our bridges, most bridges, go to any random bridge, go to this Dadar bridge or you go to Palarivatam bridge. You know what is the condition of that bridge. Bro, it can collapse at any time. Now today, morning ka newspaper, I get the shock of my life. Today's morning newspaper tells me that from the month of February, the Prabhadevi Parel bridge is going to go under demolition for 2 years. That KEM hospital straight you take, left mein Gajanan Vada Pav comes, then Parel station comes, then the bridge starts. Earlier we used to call it Elphiston Bridge. On the other side, we are suddenly in a posh area. Then we take a right turn to come to this branch. That's my daily route. If I have to come here, they are breaking that bridge. Now go where? Tilak Bridge. Bro, Tilak Bridge is already on ventilator. And before that, what do we have? Curry Road Bridge. You know that Curry Road Bridge, climbing is nice. While going down, you are lost in a crowd. Bro, I will have to take a break from this center for 2-3 years. So before you join the final ka, just confirm with me. Only because of the bridge, no other reason. No other reason. You understand? Condition of our infra is horrible. And most organizations are not interested. Please understand the reason also. Infrastructure will require me to do investment for 15-20 years without any income because I can't have toll collection unless and until it is ready. I will preferably go for FMCG, fast moving consumer goods. They get sold very fast, we get recoveries very fast, and we can reinvest those funds. You know FMCG, like HUL, like ITC. ITC makes what? Shampoo. Fiyama is ITC product. Soap, Sunfeast, ITC product. Books, classmate books, ITC product. Hotels, they have demerged the hotel business recently. Because, by the way, you know full form of ITC? Kya? Income tax, input tax credit. Too much of IDT. I know, favorite part of taxation. I understand that. Indian Tobacco Company, ITC started its business with that only. ITC is the largest and probably the only cigarette manufacturing company of the country. Whether it is the classic or whether it is the ever gold, they are all ITC products. Marble also. That is also classy. But gold will remain gold. They are all ITC products, are you aware? Are you aware imported cigarettes are banned in our country? You know or you don't? You know. Knowledge. Knowledge. You can buy from duty-free shops at airports. That is allowed. We'll keep a lecture on that. ITC का goods get sold fast, तेज, they get sold, and then the money recovered can be reinvested. But think about it, in the infra business, 15-20 years you don't get any recovery, so it becomes effectively a loss-making business. And during that period, you are already struggling with cash. In that, if we make you to pay interest to your investors, interest is a fixed cost, no? Then the company will not be interested on. Everyone will leave infra, and government knows government alone cannot build infra. They need to be dependent on companies like L&T, etc., to help them to build the infra. So such facilities are given to infra companies. What is the facility? Today you collect money from people and no need to pay anything to them as interest or anything. Just take the money. 90 rupees, for example. So for investor, it is purchase price. One fine day, when your infra is ready and toll collection starts, no, believe me, you will earn massive. Bro, in a couple of years, your NPV will become positive at the desired IRR. IRR, 10% IRR, 0.909826753. How do I know this? I have taught costing, FM, audit, everything at inter and final. I have taught all subjects except law. And as far as IT, or it's removed only, no IT, no. IT or EIS or your strategic management or your ISCA, we used to have a subject, information system control and audit, 100 marks paper at CA final. Or the present day IBS, integrated business solution. Even if my ancestors come back to the planet, no, they will not be able to teach that subject. But financial management, you all have studied. NPV, net present value of outflows, present value of inflows. Once you start making money, no, your NPV will become positive. So at that time, give the investors a handsome return. So infrastructure companies will be allowed to make this issue. Think about it from the investor perspective. Is this purchase price and selling price? We want to encourage you to make investment in the infrastructure sector, and therefore this will become long term after 12 months. Understood the logic? After today, what do you have to learn? When does capital gain become long term? Long term asset. When does asset become long term? Holding period greater than 36. Sometimes greater than 12. Both cases less than or equal to will go in short term. What falls in 12 months? First, listed securities, but this will not include unit, because units have second point, that is units of equity or mutual fund. And third, zero coupon bond. Understood all three? Not yet over. Sometimes your asset will become long term if the holding period is greater than 24 months. So we have three categories: 36, 12 and 24. But in all the three categories, you are clear about one thing: less than or equal to, both will go under. Less than or equal to, both will go under short term. Sometimes if more than 24 months. This 24 months was a brainchild of Jetli ji. As a student, I studied only 12 and 36. But Jetli ji introduced 24 months, 2 points, back to back. 1 year he introduced one asset, next year he introduced one more asset. And since then, last 7-8 years, we have three categories: 36, 12 and 24. 2 assets. Jetli ji said immovable property. So your residential house, personal, but immovable. Is that a capital asset? That will become long term after 24 months. Immovable property will become long term after 24 months. Jetli ji ka exact budget announcement if you don't. Property market is going through bad times. Not a lot of people are investing in property. To make the property market attractive, I hereby propose to reduce the holding period of becoming long term from 36 months. Because if it was not here, so where was it? If it was not in the 12 months ka list, so where was it? I reduce it from 36 to, see, understand, if we reduce the period, that means benefit will come faster. And that is the typical reason why Jetli ji brought this 12 months or 24 months ka category. So 12 will be too early, 36 is too late, 24. immovable property, whether it is land, building or land with building, it will be considered as long term after 24 months. And Jetli ji brought one more thing. He said any kind of unlisted shares, any kind of unlisted shares, right now they were becoming long term after 36. See, understand, listed we have 12, that means unlisted will all come here. So think about it, listed shares, listed debentures, both are in 12, and unlisted shares and debentures both were in 36. So what was the logic issue here? Everyone focus, logic wala part, that shares and debentures, no, they have the same rule. Listed for both it is 12, and unlisted for both shares and debentures it is 36. This is giving a wrong message. Do shares and debentures have same risk? No. What is riskier? Everyone agrees shares are riskier. Chalo, in listed you keep both here, no problem, because once on stock exchange anything can go dak 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 dak. So listed shares and debentures both you want to keep in 12, no problem, they can still be treated same. But in unlisted you cannot treat shares and debentures together here. You have to make some segregation in them. So to make the segregation, what we do is let the debenture remain in 36, the shares will be sent in 24 is the logic. So if you observe that way, for shares 36 is eliminated, listed 12 and unlisted 24. For debentures 24 is not applicable, listed 12, unlisted 36. For all other securities like government securities etc, bonds, listed 12, unlisted 36. But for units we don't check listed, unlisted. What will we check? Equity or others. Equity 12, others 36. And zero coupon bond also will come in 12. Immovable property will come in 24. Understood? 3 assets in 12, 2 assets in 24, everything else under 36 is what you finally take home for exam. See, if I remove the logic part from capital gains now, is where people will say that bahut kuch learn karna padta. You have to learn a lot of things. If we remove the logical part, capital gain is 50%. Capital gain basically targets your common sense. If you know the reason that immovable property want to make it attractive, chalo reduce. Unlisted shares and debentures both can't be 36. See, listed both can be 12 because both are risky. But unlisted both can't be 36. So keep shares in 24 and debentures in 36. So we get 2 in 24, 3 in 12, everything else in 36. And whether 36, 12 or 24, equal to will always go in short term. This is how and when an asset will become long term. So, ladies and gentlemen, just to remind you, we are doing our series of 3 questions. Which 3 questions? Question 1, when it becomes long term, and question 2 and 3, what are the 2 tax benefits of long term? Just to remind you, we are doing types of capital asset. Latka will give us Latsag and Satka will give us Satsag. Latsag has got 2 tax benefits. So to get the benefit, gain has to be long term. But when will gain be long term? When the asset is long term. So we were learning the definition of long term asset. Now that we know what is long term asset, typically your brain must be telling you, sir, ye ho gaya. Now let us go and learn the 2 tax benefits, question 2 and question 3. Hello? So kya? Actually, if you were a student till the last batch, so question 1, long term, short term over, and I would have gone to question 2 and question 3 now. You all are the unluckiest children ever, because capital gain ka chapter has got more amendments than the rest of your syllabus together. Your head is going to spin with what is going to, iska to already spinning. Since so long, no, the poor guy minor child, so we can't target also. Since the past half an hour, and what if I tell you the trouble has not yet started? Your head is going to, Cartoon Network mein they used to follow. As a childhood mein the eyeballs used to be round, is what typically is going to happen, because question 1 is only not over. Question 1 has got amendments. Then I will do question 2, the existing law, then the amendments. Question 3, the existing law, then the amendments. And everything there is an amendment. Too many amendments. So, we are doing long-term, short-term, the existing law. 2 and 3 are the 2 tax benefits, but the existing law has some amendments. So, we won't be going to that right now. We'll take a 10-minute break, then we will do our amendments. So, let your head spin for a while. Okay? 10 minutes break. Okay, welcome back, ladies and gentlemen. We are still in capital gains, and I want to introduce you to the biggest trouble of your life. And you all are the only people who have this trouble. Let me get this clear. Students who are giving their exam in May 25, September 25, Jan 26, or CA final students who are giving their exam in May 25 and November 25 are the students who are giving the exam of AY 25-26. And this is the worst year to learn capital gains. Worst year to learn capital gains. The students who gave the exam 1 year before you did not have so much trouble. Ask your siblings or friends who gave the Jan 25 exam. They did not have this trouble which you will face. This is what I am teaching you. It was not taught to them, which obviously means this came in the 24 budget amendment. And this is something which will of course be taught to next year students. But whatever I have done till now, you know, all this is not applicable to next year students. All that we have studied is going to get abolished. What has happened in this budget? The budget was announced. Election. This does not come in February. It came on the 23rd of July. And in the budget, Auntie decided to bring lots and lots of changes in the capital gains chapter. Lots and lots of changes. Now, when she brought the changes, every time you bring an amendment, there has to be an effective date. Normally, when a budget comes on the 1st of February, it is applicable for the next year. No, every budget is applicable for the next year. Like 23 budget came on 1st February, applicable for 23-24, AY 24-25. But unfortunately, this was a budget which came on the 23rd of July. And it is applicable for PY 24-25 only. So this much period has already gone before the amendment. Auntie did not want to wait for another few months to make the budget applicable from the next year. Auntie said all the amendments will apply from today itself. Means the amendments brought by Auntie, I call them with effect from 23rd July 2024. They were announced in the 23rd July ka budget. And Auntie said these amendments will have immediate effect from the day I am making the announcement. Immediate effect will be given to these amendments that I am hereby introducing. This is going to be the toughest time for studying. Matlab, you actually now what you do is go and fight at home. I'll tell you the reason. The timing was not correct. Either you should have been 1 year late or you should have been 1 year early. If you would have been 1 year early, this trouble was not possible or not applicable. Or probably if you would have been 1 year late, then again not applicable. Because this year, what has happened? All the capital gain amendments that have taken place. This is only the first amendment, bro. Everything that is amended in the capital gain chapter. Of course, I will be writing it like this with effect from 23rd July. They are applicable if the transfer of your asset has happened on 23rd July 24 or later. Means my with effect from this date means the transfer date. So listen, your exam previous year is 24-25. This started on 1st April, it will end on 31st March year. The budget has changed the capital gains law from the 23rd of July. But what you got to understand is your syllabus covers anything that happened in this phase and this phase. You can be asked a question for a transaction done here or a transaction done here because your syllabus is PY 24-25. So the law of this period and the law of this period is applicable to you. Means if my asset was transferred up to 22 July, I have to learn the old law, which is why I taught you 36, 12 and 24. But if my asset is transferred from this date onwards, from 23rd July onwards. 23rd July will also be considered in the new period. Then you have to learn the new law, which I will now introduce. With effect from 23rd July means you have to see the date of transfer. If the date of transfer is 1st April to 22 July, is it applicable in your exam? And you have to apply the old law. And if the transfer took place on 23rd July or later, till March, it is still a part of your syllabus. You have to apply the, which means last year's people had only this in their syllabus. And next year people will have only this in their syllabus. Because their 1st April is directly the new law, no. Only this year, AY 25-26, PY 24-25, part of the year, any sale takes place. Sale matlab transfer has taken place. So you have to do as per old calculation. And here as per new calculation, you have to know both the laws. So whatever I have taught you, we did question number 1. Asset is long term after 36. 3 assets after 12. 2 assets after 24. So we have 3 terms, 36, 12, 24. In all the 3 cases, less than or equal to will go in short term. 3 in 12, 2 in 24, and everything else in 36 if the sale took place till 22nd July. Because if I sell my asset today we are in January, so we are after 23rd July, so 36, 12, 24 is not applicable. New law will be applicable. We have to see the date of transfer, and in one financial year there are 2 periods, 2 laws. Because the amendment had a prospective effect and budget came in the middle of the year. Had this budget been 1st February budget year, so it would have applied from first day itself. It wouldn't have been so difficult. Okay, old people studied old law, you all are directly studying the new law. But you all are the only people who have to learn the old as well as new law. As I said, you all are the unluckiest people. This is the worst year to learn. But then it also depends on your perception. How you take things. What is your, attitude in life, positive, negative, how you approach life is a big thing here. The people who studied last year, one thing, tell them clearly, if you have people at home, your friends, you have friends, no, in the last year ka batch? Who? You know how I came to know? I saw her Instagram story wishing you happy birthday. I mean, this was last year's student and this is last batch ka student, they must be knowing each other. You also have brother. Tell them that whatever capital gain you have studied for exam is by now outdated. Go tell them this. Fantastic. Now, there will be students who will be joining the next year's batch, that is May 26, September 26, Jan 27. They will learn only this. They will never know once upon a time it was 36, 12, 24. You all are the only people who have the opportunity of learning both. Knowledge you will get for both. Of course, moving forward in life, this is the law. Unless she amends it again tomorrow. You never know. See, everything, that like literal Bhagavad Gita ka knowledge, everything is momentary. Momentary, shanik is a word in Hindi, Sanskrit, Marathi also. You use the same word, shanik. Everything is temporary. It is there today, it may not be tomorrow. See, you and me are meeting every day. As of now. There will be a time when this will stop. I know some are like, sir, jaldi karna. Fatafat finish this now. Because you have every day diminishing marginal utility. But one day when you lose that person, then you realize importance. Human nature, you realize importance only after you lose. Shameless. She's like, still I will not realize the importance. Garam pani, वो गरम पानी, मतलब मीडियम वाला या ठंडा नहीं. See the way you perceive and like it or hate it. You have to learn the existing as well as the new law, because your exam year is 24-25. That starts from 1st April. And amendment starts from 23rd July. So old law till 22 and new law from. In every question, can you believe this? In every question, I have to actually mention the date. This year's books. Next year's books, when I will make again, I will remove the date because sold on any date during the year, same law is applicable. But this year ka typical environment is this, that on the basis of date of sale, we will decide whether we have to apply the existing law of 36/12/24 or the new law which I will teach you. All capital gain amendments have taken place except a couple of which I will mention. But wherever I write now in this chapter with effect from 23rd July 24, what does that mean? That the amendment took place in the middle of the year? Listen, it means that sale from this date onwards, you will apply the new law. And that means in all the things that I am teaching you, I will teach you existing as well as new. Like literally it is double work. Efforts are increasing, time consumed is increasing, data that has to be done in the textbooks, in the notebooks is increasing. If there is one thing that is not increasing, is the remuneration of the faculty. This calls for a separate protest altogether. Not increasing. Not increasing only, bro. It is high time. Therefore, I am telling you. See, these days bidding is going on. So, and once a person completes the batch, then so there is absolute freedom. No, then there is nothing unprofessional. You live in between, then you can be criticized or anything. After completion of your commitments, then you are free to go, no, bro. You know, to just confirm with me once, huh? Because we have mutually decided that this projector you want or me you want. एक बार देख लो, look at this projector, how it is looking, then look at me, how I am looking, and then compare that. Nice, sir. Whoever comes and sits on the chair, I want this projector, that is more important. Or this bench is more important, sir. This has cushion. No, sir, this AC is good. So only if it is this AC, I will learn in final. Whoever teaches. See, priority, no? What is your priority? You decide. If your priority is this projector or this AC, so then you come and sit in the same class. You may or may not coincidentally find me also. If same thing, if everything is same, then so there is no problem only. But if there are some changes, then which one you want to take and which one you want to leave, you take your call. But the point is that in this year, you will have to learn the existing law as well as the new law. You have no choice or maximum choices. So try for May 26. From day one, new law is applicable. But then, what if in tomorrow's budget, there are amendments of PY 25-26 applicable for May 26 exam? And some of these amendments, Auntie says that it will take some time for the economy to be ready for these amendments. So let us keep the effective date from 1st July, 1st October. They do it, huh? They bring in February budget, but apply not from April, but from July, from October, from December sometimes, from January. So it is going to happen in every budget. Keep postponing. No? Or alternatively, to hell with it. Thank you. I am going to give the exam now and clear it now. If there are complicated amendments for me, they are for all the people who are giving the exam. Every morning tell yourself, I know more than anyone else. I know more than anyone else. I will score more than anyone else. You don't have to get 90, 95, 100% marks. You just have to get more marks than 70, 80, 90% students. They can't fail everyone. They have to pass the top 10%. You just be better than that top 10%. Play mind games wherever you meet CA students. You are learning FM. I have to complete an FM syllabus long ago. With 2-3 mock tests also I have practiced. Bro, you have not studied capital budgeting ka ka. You have not studied ratio analysis ra. But you tell, I have done 3 mock tests I have done. You still started FM? I have completed 3 mocks. Oh, your costing syllabus is not over. My syllabus is over. I have finished revision. Now I am doing RTP. Every time you don't say I have finished 3 mocks. For some subject. Oh, tax is so going on in class and we have such a good book. I will be able to complete it in the next 15 days. Tax will also get it. Perfect. I am to aiming for rank only. Who gives for passing? Bro, take this psychological advantage over that friend. You don't know anything. But that friend will still score less than you. And if institute has to pass one of you, you will be that one. Play mind games. Every person sitting next to you is your competitor. Is going to come in your way of clearing these exams. Don't share your secret with that person. Do be the Chaturramalingam. But learn the old law as well as the new law because that everyone is doing. You don't have immunity from this. Your only option is give me 26 ka exam. That is an option. Karna. Maybe we are already too late, too much of cancellation. So let's give me 26. Because September 25 or Jan 26 people have the same trouble. So ladies and gentlemen, capital gain amendment, if the sale, the transfer has taken place on 23rd July or later and we are clear that we will have to learn both the laws. So we are still in question number 1. Last year ka students know, right now I was teaching question 2 and question 3, the 2 tax benefits. But to you, I am still in question. By the way, what is question 1 if in all this you remember? When will asset become? What was your answer? Old law 36, 12, 24. With effect from 23rd July 24. That means the sale has to take place on or after this date. There are only 2 categories. As per auntie is saying I am going to simplify the income tax law. I am going to reduce the so many permutations, etc. So there will be only 2 things. Assets will become long term after 12 months or assets will become long term after 24 months. I hereby eliminate the concept of 36 altogether. Wait! If sold on 23rd July, August, September, October, November, December, January, February, March, if sold on 22 July, then we will apply 36 also. But one thing we all understand, that even now when 36 is eliminated, less than or equal to will be short term. Because an asset will become long term if it is greater than 12 or greater than 24. And how are they making it easy? They say all kinds of listed securities. All kinds of listed securities. Whether the security is shares, or you want to write both, equity shares, preference share, bonds, debentures, units, all listed securities we will cover in 12 months and that's it. All other assets will be covered in 24 months. All other assets will be covered in 24 months. So some assets it will make a difference, but some assets it may not make a difference. For example, listed securities earlier also 12, now also 12. Unlisted shares earlier also 24, now also 24. Immovable property earlier also 24, now also 24. But some assets which were going in 36, gold for example. Gold was not there in 1224. Anybody has sold gold till 22nd July. So you have to see long term if 36 months. Anybody selling gold today, you have to see long term if 24 months. On the basis of date of sale, it is going to change. And now, that way if you think about it, when I taught you guys question number 1, 36, then all the complications of 12 months, explaining the meaning of units, then again 24, explaining that thing called zero coupon bond, etc. Do you imagine the time that we consumed only to learn that type of asset? Because today's lecture started with personal movable. After that, we have only done question 1. But next year, this part, if I am teaching a May 26 student, I'll take 5 minutes. Latka so lat suck so tax benefit. When will it become latka? 1224. Listed securities 12, everything is 24. Chalo, let's go to question number 2. You all are unlucky, nahi? I am unlucky. My effort is increasing. You all are to just enjoying the handsome face and the excellent show. You all are only sitting, relaxing and enjoying the show. It is me who has to do double work at same payment. Bro, this calls for an increment. Shall I give my QR code? Shall I give my contact number for GPay? No. Up now you ask for number for doubts. Abhi ruk. Kya? Anything is fine. It is not about, see, you give 1 rupee also. It's fine. 1 rupee hoga? हाँ तो चलेगा. No problem. Cash is also fine. Give. I'll give you change. Now give. What you're not understanding is 1 rupee also, if you're getting, no, take it. Because you are supposed to do this double work without that 1 rupee also. So that 1 rupee is also profit only, don't you think so? Bro, do you realize the trouble and the time and energy we both, you and me, have to take? But you have to still clear the exam. So you have to take. I have to take at least for this year. I am hoping and praying all the Gen 26 batches get over fast. Because once that gets over and I come to my duty towards my May 26 students, which will be basically the budget of tomorrow, which is going to be applicable for May 26. From July onwards, I will be starting all the batches of May 26 inter and final. Finally, I will get rid. It's a matter of 4-5 months till now that I have to do the old law as well as the new law. But when you come to final, if by chance you choose faculty over the projector, by chance, it is for those who are going to choose, not to you. Exceptions are always there. We can see there are so many exceptions here. Also, if you choose faculty over projector and I am only teaching you, then we will definitely learn only that 1224. Assuming that between today and that day, what a big assumption. Huh? There is no amendment. We are assuming now, and tomorrow's budget auntie says that I bring new income tax law. Just imagine, auntie brings new income tax law tomorrow. We are still going to continue our syllabus, and every day we are learning things, knowing that later it is not applicable. Just imagine the level of motivation. Wow. Sir, chalo, let's go. Where? Outdated tax law karne ke liye we are going to a class for learning outdated tax law. For what to do? That is the examination system. No, they can't apply tomorrow's budget immediately for your May 25 exam, because tomorrow it will be finance bill. By March it will become finance act. So they can't apply immediately. I hope you understand. Hello. So with effect from 23rd July 24, all listed securities will become long term after 12 months, and all other assets will become long term after 24 months. But be careful that earlier 36, 12, 24 also we have to study and go for exam, because if the transfer has taken place till 22 July, that law will apply. If the transfer has taken place from 23rd July, then this new law, 12 and 24. Everyone clear? Question number 1 is hereby finally over. Is that clear? But related to question number 1, in last year's budget, auntie introduced a section 50AA. So question number 1 is over. Question number 1 helped us to decide what? Long term or short term. Old law 36, 12, 24. New law 12 and 24. And new law is very easy. All types of listed securities 24, and all other assets, all types of listed securities 12 months, and all other assets 24 months. Ye clear hai? Section 50AA is a deeming fiction. English. Section 50AA is a deeming fiction. English. In Hindi we call it jabardasti. Forced law that following assets will always be deemed, considered, treated as satta. To hell with your holding period. You sell these assets after 10 years also. You sell these assets after 10 years also. We are going to consider these assets as short-term capital assets. Following assets will always be considered as short-term capital asset. That means you won't get the tax benefits of question number 2 and question number 3. The two tax benefits are not going to be available to, because they are deemed to be short-term capital asset. Always short-term, never long-term. Normally, we will check 36/12/24. After 23rd July, from 23rd July, we will check 12/24. But for these assets, we will not check anything and directly declare them as short-term capital asset. Directly classify them as short-term capital asset. 1. A specified mutual fund unit. First, a specified mutual fund unit. Sir, what do you mean by specified mutual fund unit? This came in the 2023 budget. So, existing mutual funds people had already acquired. Same as your life insurance. Existing policies you have already taken. If they want to amend, so they can apply on the new ones. So, this is basically a unit which is issued on or after 1st April 23. Existing mutual fund units will not get affected with this. This will apply only on new units. Today, if you buy new units, and what does this mutual fund do? It does not invest more than 35% in equity shares. The maximum investment in equity shares is 35. That means where is the majority investment? Debt instruments. Correct? Typically, you can say it is like a debt-oriented mutual fund. Now think about it. We give tax benefits on the basis of risk taken. And anybody who is investing in debt-oriented mutual funds is virtually not taking any risk. And therefore, Aunty decided from the 2023 budget onwards that from today onwards, we will stop giving you tax benefits on other than equity units. But the problem is that I have acquired mutual fund unit of debt oriented on money market in 19, 20, 18, 19, 20, 21, thinking that I will be eligible for a tax benefit. Suddenly you change the law, then that is not my fault. So if my acquisition was before the amendment came, I will be eligible for tax benefit even on debt oriented units. But now if I acquire a new one where maximum investment in equity is 35, so majority investment is debt, and therefore it is a non-equity fund. That means I am not taking any risk, and for this reason, no tax benefit will be given. For this reason, no tax benefit will be given. Is that clear? And second, with effect from 23rd July 24. Sir, means what? The date of transfer, this or later. So wherever I am writing with effect from 23rd July 24, it means you have to check the date of transfer. Any kind of, think about it, unlisted bonds and debentures. Think about it. As far as listed bonds and debentures are concerned, they still have some risk because of the trading that is taking place. But when we talk about unlisted bonds and debentures, use your common sense. Common sense is the biggest law. Unlisted bonds and debentures, not traded on stock exchange, plus fixed interest, fixed redemption, there is absolutely no risk. No need for tax benefits on such assets. Listed still has some risk because of the trading that is happening. Unlisted has no risk. So listed will become long term after 12 months. Before the amendment also listed securities was 12 months. After also. Unlisted shares, listen carefully. Before amendment was 24. After amendment is also 24. But unlisted debentures, before amendment 36. After amendment, it is not going to become only long term. Today, if I sell any of my unlisted bonds and debentures, it will be considered as short-term capital gain, not granting me any benefit. Because from 23rd July, unlisted bonds and debentures will be deemed forced to be short-term to eliminate tax benefits for cases where you are actually taking no risk. Bro, if you are taking no risk only, why should we give you tax benefits? So unlisted bonds and debentures. But wait, I hope you haven't forgotten this story. And this story you will remember, or you have to remember throughout capital gain chapter. Because this is the biggest part of capital gain amendment that has taken place. If the sale has taken place till this date, bonds and debentures will be classified into long-term, short-term, both listed as well as unlisted. Listed 12, unlisted 36. And from this date, listed 12, unlisted always short-term, never long. Deemed to be short-term. ये clear है? So we will never get the two tax benefits on these assets. Everyone, fantastic. Question number 2. What is question number 2? 2 नहीं ना, first tax benefit ना, second will come in question. क्या पागल लोग. If 2 and 3 are 2 tax benefits, so question 2 can't be 2 tax benefits. You want one more break? I'll tell you. First tax benefit. How can 2 tax benefits come in one question? First tax benefit of long-term capital gain. So ladies and gentlemen, CA, inter, tax, direct tax, NTTI, capital gain. Capital asset. Types of capital asset. Type 1 long-term, type 2 short-term. Because gain or loss will depend on type of asset. If my gain is long-term, I am eligible for tax benefit. When will my gain become long-term? When the asset is long-term. Now question 1 has taught me when asset will become long-term. Now that I know when my asset will become long-term, what is my next target? What are the 2 tax benefits? But that will come only and only if my gain is long-term. My first tax benefit is going to be, I am going to be eligible for something called an indexation benefit. I will be eligible for something called indexation benefit. And I know that you all are the WhatsApp university generation. So, sir, somewhere I read, sir, indexation is removed, no, from income tax, sir, indexation. So, right now I taught you that in case there are amendments in capital gains, the amendments will apply from. So, even if indexation is removed, by chance your WhatsApp knowledge is correct. But still I have to teach you the existing law. Why, sir? Because the effective date of amendment is basically if sale has taken place on 23rd July or later. So, can the transfer of the asset take place from 1st April to 22 July? So, you have to do indexation. And from 23rd July when auntie has removed indexation, kya removal hai, bro? That removal is as good as no removal. We'll talk about it. First learn existing law, then let's complicate it. Let's simplify nahi. Let's complicate. Let's complicate it. Okay. Chaliye, let us see. Let us see. What are they talking about? What is this concept called indexation? If I have to tell you the meaning, indexation is basically adjusting your cost of acquisition for inflation. Indexation is basically adjusting your cost of acquisition for inflation. Understand with the help of an example. Mr. X in the year 2001-2 had some funds. Example, rupees 1 lakh. This amount he invested in a house and purchased a house in the year 0102 for rupees 1 lakh. For effective study and better retention, it is advisable that you answer simple questions. For example, who is the assessee? Mr. X. What great thing he has done in life? Purchased a house. In the year 1, 2, for rupees 1 lakh. You have brain, there can't be capital gain. Capital gain or any income does not happen at acquisition, it will happen at the time of transfer. So till now there is no capital. In the year 24-25, this asset is sold for rupees 1 crore. Now my question is, will there be capital gain? Yes. If I ask you to calculate capital gain and you apply the childhood format or formula that you have studied, so sale consideration 1 crore, that is 100 lakh, minus the kawwa, cost of acquisition, that was 1 lakh, giving you capital gain of 99 lakh. हाँ क्या सीधा सीधा गांव जाने का? Why? क्या बोल रहा है? Are you even understanding what you are speaking? सीधा गांव जाने का? For what? With sir. If you give wrong answer तो जा. What do I do, bro? You give wrong answer to me, I won't send you to your village. Where is your village? Gujarat. Where in Gujarat? Mehsana. Where in Mehsana? You give wrong answer in my class, I will take you there with me, and on the way what I'll do, you know it very well. And you have to pay also, huh? My return journey and going wala journey. I will throw you somewhere on the highway when you are almost gone. After few months, people will find you. And then there will be an investigation. Police will check CCTV camera. Then you tell the police, sir, I did it voluntarily because I deserved it. So basically, beta, सीधा गाँव नहीं जाने. On the way, wherever you are half dead, no, before your gav comes, I will throw you from the car. So focus. Selling price 1 crore. Cost price 1 lakh. So capital gain 99 lakh. If we apply the basic formula of selling price minus cost price that we have studied all our life, so this is giving our answer. But somewhere when we look at this answer, we are unable to digest it. For the reason that, sir, the year in which I am calculating my capital gain, 24-25, this is present value of my money. But this amount that I have spent like literally 2 decades ago. And money does not remain the same over the years. We know of a concept called time value of money, that is inflation, the effect of compounding. When we study capital budgeting, what happens is capital budgeting gives us future value we have to bring to the present value, and therefore we have the concept of discounting. When we bring future value to present, we have discounting because money's value in future will be more than today. But if I have to bring a past value to the present, then I have to inflate. You understand? I have to increase that value. Now then, as far as this calculation is concerned, is this the present value of money? But this is past value of money. This value was spent in the year 1, 2. So today in 24-25, that value cannot be considered 1 lakh. We will bring it to its present value and understand the difference between capital gains and capital budgeting. Capital budgeting wants to bring future to present, so we discount. But capital gains wants to bring your past value to present, so we will have to increase. So do you understand? From this, I won't be subtracting 1 lakh. I will be subtracting a higher amount, and that higher amount is known as indexed. That higher amount is known as indexed cost of acquisition, ICAI. And therefore, do you understand, if the amount that I am taking as cost is higher, the capital gain will be, and therefore the tax will be lower. See, calculation I will explain. Sir, if you are saying higher, so what exactly? Because I'll go to the logic right now. I was telling you meaning of indexation. After meaning, we will go to logic. After logic, we will go to calculation of indexation. After calculation of indexation, we will go to exception. Some cases indexation not available. Then we will go to amendment, that indexation eliminated. So first teach, then tell them to eliminate. Na 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 na. What Thug Life? Oh Thagesh, you seen Thug Life or no? You don't know Thug Life? Google. If we inflate cost, do we reduce income and tax? Hello? That is called the benefit of indexation. Meaning is basically we will increase your cost. So listen, if your capital gain is long term, we won't subtract KAUA, we will subtract ICAI, index cost of acquisition, which is a higher value. Why, sir? Because 1 lakh was incurred many years ago, we have to bring it to its present value. Had it been short term, then no problem. Between last year and present year, there may not be much difference in the value of money, but in 20 years, there will be difference in value. This is the meaning of indexation. Sir, now, what is the logic of indexation? Capital gain, this be careful, because see, meaning everyone will know. Calculation, every CA student of the country will know. If there is something which you know more than others, it is why, sir, why are we doing this? The logic. See, the objective of the chapter capital gain is, what is the profit that my asset created for me? The gain on an asset. Which is the asset in the story that we have discussed? The residential house. How much profit this asset created for me is capital. What you have to understand is that in the year 0102, I had funds of 1 lakh. Option 1, I could have simply invested this money in a bank account. Then also over the years, I would have received interest. So in 24-25, my principal plus interest, the total amount would have become 11 lakh. Example. See, it will depend on which bank you keep money, what is the rate of interest, you take what frequency ka compounding, you take simple interest, compound interest, you put in FD or saving, lot of factors, but it is an example that simply put in bank account also. Everyone agrees to one thing, that 1 lakh won't remain 1 lakh for 20 years. A bank account will also change it. But I have taken some other decision. I decided not to take this route. Where have I kept my money? Where did I invest this? House. Now that I invest in house, I won't get over the years interest. No, I won't get any recurring profit. See, interest is guaranteed in bank account, but rent is not guaranteed in property. We may get, we may not get. That's a separate thing. And over the years, my house gave me 1 crore. Everyone is with me? This is the logic of indexation, bro. My house was purchased for 1 lakh. Has given me a return of 1 crore. The house has not made my 1 lakh ka 1 crore. Nahin. I would have made 11 lakh without house also. Do you agree? If I did not have this house, then my 1 lakh would have become 11 lakh. I would have earned a profit of 10 lakh. Without house, without asset, also I would have earned. So what is the addition, value addition in my life by the house? My house has not converted 1 into 1 crore. My house has converted 11 into 1 crore. The interest that I have lost by investing in the house is also an opportunity cost. If I did not have the house, I would have earned interest. So listen, selling price 1 crore. Actual cost of house 1 lakh. And opportunity lost, interest lost 10 lakh. 10 no, because 1 became 11. Is also a loss that I have suffered because of the house. So my house ka profit generated for me is not 1 crore minus 1 lakh. It is 1 crore minus 11 lakh, which is why in capital gains we have to give you indexation. A capital asset invested in will always result in some loss of revenue. Is the logic. The logic is the opportunity cost. The logic is 1 lakh won't remain 1 lakh over the years. Even if you don't have the asset, it will change. So how much extra has my asset generated for me? Is the logic. Meaning of indexation is clear. Inflate cost. Only in long term. Inflate cost. Logic is clear. So let's go to the calculation of indexation. So step by step, no. Question number 2 is first tax benefit. What is the first tax benefit? Indexation. Indexation का meaning and logic clear. So let's go to the calculation. Every year, government releases something called cost inflation index, CII. In your foundation maths, you had a chapter called index numbers, which you left in options. Some are like, sir, that was the only thing we understood. And then some to this are reacting by saying, sir, we, the graduates, index numbers. Compared to last year, what is the change in value? Every year, government will release an index, a number on the basis of inflation. When this is released, it has to be in comparison with last year. So 24-25 index will be in comparison with 23-24. Likewise, every year we compare with last year. So we have to start somewhere. So first, government will take a base year. For the purpose of indexation, government took the financial year 0102 as the base year. The previous year 0102 is going to be considered as base year for the purpose of indexation. For this year, the government gave a cost inflation index of rupees 100. Government says, let the price of every product in the year 0102 be considered or treated as 100. As we go further into the calendar and we check inflation in the market, we will decide what is the latest index. For example, in 2-3, the index changes to 105. This basically means anything, the value of which was 100 in 0102 has changed to 105. If your income between 0102 and 0203 has not risen by 5%, that means you are into losses already. Expenses have increased by 5%. Your salary should at least match this much inflation. Likewise, in 3-4, they said inflation is this much. Means anything that was worth 100 in 0102. Now follow the story. Became how much in 0203? 105. And 3-4? Like this, if we go further in the story. So in the financial year 24-25, the index is 360. Financial year 24-25, the index is 363. Before that, it was 348. Every year they release it. What does this mean? Please understand. If you could have purchased something at a price of 100 rupees in 0102, the same thing if you want to buy today, you will have to buy at 363 rupees. Anything that was worth or costing 100 in 0102, ka value today has become 363. So if we do as a comparative analysis from 0102 till 24-25, how much has inflation increased my index to from 100 to 363? That means if I had purchased a house for 1 lakh, then what is the value of that house today? Calculators, ruko. Answer is not is simple. Somebody who has little bit arithmetical knowledge will say 3,63,000. You're not doing anything great. Focus on the concept first. How much was the index of the base year? 100. What is the index of the exam year that you have to go and study? 363. That means 100 has become 363 over the years. Then 1 lakh has become how much? You call it cross multiplication, unitary method. 1 lakh into 363 divided by 100 will give you your ICAI on the basis of inflation factors released by government every year. Now understand, we are doing the concept of indexation. This is the first tax benefit available only if the gain is long term. We will get the first benefit, indexation. What is indexation? We will increase your cost. That means we reduce your gain and reduce your tax. What is the logic? If I did not have asset, I would have earned some other income. So the opportunity lost. So how much has asset increased? My value is that is difference between the additional cost of opportunity and the selling price of the asset. In our example, we won't do 1 crore minus 1 lakh, we'll do 1 crore minus 11 lakh. How much has the asset generated extra? Correct? And what is the calculation? Every year, government will release something called cost inflation index. Correct? Base year 0102. Index of that base year 100. Exam year 24-25. Index of that year. Now I played a smart example with you. I purposely took purchase year as base year and sale year as exam. So these two numbers were really easy. By the way, as long as you are giving exam in previous year 24-25, that is May 25, September 25, Jan 26, this number won't change. Because transfer has to take place in this year for a question to come in your exam. Capital gain can come in your exam only if transfer took place in 24-25, because that is your applicable previous year. Any other year ka question they can't ask you. So transfer will be in this year, and if transfer is in this year, so for multiplication there is only one answer, 363. But for division, it was a coincidence that I took an example where purchase took place in base year, so we divide by 100. Supposingly I would have purchased my asset in this year, so what I would have said, 105 has become 363, then 1 lakh has become how much? So in the format, this 100 would have changed to 105. So what we understand is multiplication will always be fixed, that is our year of transfer. But division will change based on year of acquisition. You agree with that? So sir, do we have to learn all these 20-25 indices? Wait. You have to learn two. One, the base year. Year is which one? 1, 2. And index is 100. And second, your exam year. Which is your exam year? What is the index? You have to learn only these two. Any other index will be given to you in the question. You have to learn these two. These two you will have to learn. Base year 100, exam year 363. Base year 100, exam year 363. Anything else will be given to you. Any student here who has memorized log tables by heart? You all know what are log tables, no? Anyone has memorized log tables by heart? No? No? But you all only know log 1 is 0, log 0 is 1. वो भी नहीं पता. Very good. Like that, you will not learn all the indices by heart, because they will give you in the exam. And by chance you do, see, you are putting extra effort. You know, I am telling you to learn only 2, but you are learning all the 20-25. You're putting extra effort. Then I also want to give you free tax advice. I normally don't give free tax advice. Consultancy is not covered in the admission. Consultancy, you won't come to office. You can't be expecting me to one day come to me and say that, sir, I got this income tax notice, sir. My father, mother, uncle got this income tax notice, sir. Now how to reply? I will draft the reply. Just inquire about the charges. I will charge less. Perquisite valuation question पूछूं? So tax consultancy is obviously not covered. But I am giving you free tax advice. Why, sir? You are so sincere. You want to learn all of them by heart. No? So free tax advice. Whenever you file your income tax return, your own return, you kindly avail one deduction. You are eligible for it. There is a deduction under section 80U. Write it down. There is a deduction under section 80U. You please avail. In fact, in 80U, there are two categories. 75,000 and 1,25,000. So you are eligible for 1,25,000. Please take this deduction. Any student who is memorizing all the numbers by heart, please take 1,25,000, not 75. You are eligible. We have discussed this before. Never abuse anyone. Just tell them 80 you and go ahead. Give free tax advice. You want to fight with someone? Don't fight. Go, what you're fighting? Come, I'll give you tax advice. Take 80. 125. Because any person who suffers from normal disability, it is 75,000. But the moment you have a severe disability is 1,25,000. So your eligibility goes to 1,25,000. You have extra time, solve extra mock test papers. Don't waste time on things or people, concepts where you are not going to get anything in return. Don't waste time on things, people or concepts where you are not going to get any return on investment. No ROI, bro. ROI may end up being negative. Concepts का बोल रहा हूँ, come out of your people का thoughts. I know the moment I said no ROI, you are in that zone thinking about that 1% continuously. हाँ, sir क्या बोलूँ? So many days I am trying, nothing is happening only. Concept का I am saying concept. Okay. Your smiles and your faces make it clear, make it evident कि हाँ sir was thinking about that one particular person. Happy? चलो, now let's go ahead. Exam year 24-25, cost inflation index 363, base year 0102, index 100. Multiplication के लिए it will always be 363 because sale has to be in your year. Division will depend on acquisition. If acquisition has taken place in the base year, then 100. Any other year, so they will give. Is that clear? So what have we reached? You all have understood ICAI calculation? Correct? So listen, we've done meaning of indexation, logic of indexation, calculation of indexation. Correct? Now I would like to give you definition. And last I will do exception and amendment. Definition. Meaning clear, logic clear, calculation clear. Now what is definition? This is how they have written the Income Tax Act. I am giving you the definition of index cost of acquisition as written in the Income Tax Act. Index cost of acquisition is that cost of acquisition which bears to the cost of acquisition the same ratio as cost inflation index of the year of transfer bears to the cost inflation index of the year of acquisition. Index cost of acquisition is that cost of acquisition which bears to the cost of acquisition the same ratio as cost inflation index of the year of transfer bears to the cost inflation index of the year of acquisition. All agreements are contracts if they are entered into by the free consent of the parties competent to contract for lawful consideration and lawful object and are not expressly declared to be void. According to Section 4 of the Indian Partnership Act, partnership is the relationship between two or more persons who have agreed to share the profits of a business carried on by all or any one of them acting for all. Your ratta is perfect from childhood. Forget this. Every body continues in its state of rest or of uniform motion unless it is acted upon by an external unbalanced force. The rate of change of momentum is directly proportional to the impressed force and takes place in the direction in which the force acts. To every action, there is always an equal and opposite 9th standard. नूतन का तुमको नूतन आइची नूतन आइसैक law of motions 9th standard. Ratta is perfect childhood. So one more time. Index cost of acquisition is that cost of acquisition which bears to the cost of acquisition the same ratio as cost inflation index of the year of transfer bears to the cost inflation index of the year of acquisition. So while I was speaking, I also wrote it mathematically. So maybe you have understood little bit. But by reading the plain language of the income tax law, bro, you'll die, but you'll not understand what will happen. Little you understood, or some are like, yes, sir, whether you spoke or you wrote nothing to understand. We are interested in this. Do we know this because we have paid? I'm asking you, do we know this? So this cost is what we are interested. This upon this is the same ratio. Index cost of acquisition is that cost of acquisition which bears to your cost the same ratio. Like it can be twice or thrice or 1.5 times or 3.63 times as cost inflation index of the year of transfer bears to the cost inflation index of year of acquisition. Is this your year of acquisition? Between this year and this year, how much did the index increase? In what percentage the index increased? How many times the index increased? That much your cost will also increase. Between acquisition and transfer, whatever is increase in index will also be increase in your cost. So this upon this ratio will be same as this upon this ratio. Index cost is that cost which bears to the cost the same ratio as cost inflation index of the year of transfer bears to the cost inflation index of the year of acquisition. Now understood little? Okay. If we have to simplify it mathematically, comfortable? Hello? Comfortable, no? Cost of acquisition here. This is index cost of acquisition. Hello? I will show you magic. Abracadabra, gilly gilly chew. Check. Check no. Index cost is that cost which bears to the cost the same ratio as CII of transfer year bears to the CII of acquisition year. Majja hai. So now we are done with meaning, logic, calculation, definition in the act. Hello. Everyone is clear? Last two things. There are some exceptions. Bro, capital gain, no, everywhere they have exceptions. Inclusion, exclusion. Then in exclusion, they gave SADA PJ. Then in 36 months, they gave exceptions. 12 month, 24. Sometimes 12, sometimes 24. This sometimes comes too many times in capital gains. They call it sometimes, but it comes every time. Kya irony hai na, bro, life. Sometimes is many times. You get indexation on long term, but sometimes you won't get any indexation. Following assets, you won't get any benefit of indexation. Following assets, you won't get any benefit of indexation. Again, what will happen in CA final? I will do question 1. Now at that time we will do only this much, all listed 12 and everything else 24. Then we come to question number 2. Question number 2 we will do indexation. Then I will say sometimes no indexation. Then I will ask you. Then you will say yes sir, if it is short term, no, so no indexation. Ek gadede, pagal, customer. In short term, by definition only indexation is not available. So if you have not understood the question, let me explain the question. Short term is disqualified by default and by definition. So in case the question is not clear, let me explain the question. My asset is long term, my gain is long term. Asset is long term, gain is long term. Asset is long term, gain is long term. Still I will not get, bro, asset is long term, gain is long term. Still I will not get the benefit of indexation. Do you understand? Then in final C, I will ask you the list. Then you will speak nonsense. Same thing we have to do. SL. This is what? You want to keep this code word? While doing this, be careful. And don't do it with your pen, otherwise. Sir, I want to answer, or sir, I don't want to answer. You're right in front of me. No? You say yes or you say no. In the final CA class, directly pick you up and ask, bol. Cases where indexation is not available. Shall I pick you or shall I not? Pick me. has got lot of meanings. to ask me. Thank God you didn't say lift me. Uh, Ask me. Listen. See, even if you would have said no, it would have been okay. Because whether you say, sir, ask me or don't ask me, at least one admission is confirmed. Sir, don't ask me. It's still fine. Sir, I will be there in the class. No problem. Because it is highly likely that between today and that day, you will still forget that list. Which is very normal. Because how many of you all remember all the perquisites valuation today? Is a big question. So, between today and CA final, remembering capital gain, isn't it too much to expect? And I understand. Now, you will be able to relate also. See, at the beginning of the syllabus, if I say, no, you are short-term memory loss, you won't understand. But now, if I say short-term memory loss, you will understand. Sir, perquisite taught recently, but we have forgotten short-term memory loss. But when it comes to capital gain coming again in CA final, by that time, it will become long-term memory loss, don't you think? Now, the terminology will be relatable to you. Like a cow, you are making sound. You are, you practice at home every day. That is why we say don't take lessons from Shakun. Even if long term you will not get indexation, it's a list. There is some reason. We will discuss the reasons. Indexation won't be given. Ye clear hai? Everyone? And listen. Yes, we know that as per amendment, indexation is going to go away for all the assets. But that amendment will apply from 23rd July. So till 22 July, old law is applicable. If till 22 July, old law is applicable, that means indexation is applicable. But on these assets, there won't be indexation till 22 July also. From 23rd, not available, separate thing. That I have not yet taught you. We'll be doing it later. But you won't get indexation on these assets at all. What are these assets? 1. Bonds and debentures. No indexation. Why, sir? See, what is the logic of indexation? Inflating your cost for the risk taken. Anyone who remembers the logic of indexation, remember that we have lost some interest. If we take bonds and debenture, we have not lost any interest. We have consistently earned our interest. So, end of that holding period, when I sell my bonds and debentures, the profit is profit of my asset only. There is no opportunity cost. Understood? Why no indexation on bonds and debentures? But there is an exception. Sir, I quit. That means anything that comes here, yes, indexation. Indexation? No indexation? Oh, rose ka petals you have done? Loves me not. Loves me? You've done that? Bro, don't do. Last minute will come to not only. Don't do it, bro. You are CA students. Do it for your calculator. Maybe it will come to loves me. Bro, some people, their calculator also does not love them. You do 5 plus 3, it gives 7. Such is the sad life of CA students. So listen, this is so confusing, more confusing than demonetization. First they say long term, yes, indexation. Then they say certain cases, no indexation. Understood. Bonds and debentures, no risk. But there are some assets which are bonds and debentures. But still they want to give indexation. So they are removing from the exceptions. That means putting in the yes indexation rule. Case 1. capital indexed bonds. Wow, look at the beautiful name given. The name itself indicates that these bonds, we are going to grant you the benefit of indexation. Why, sir? Sir, see, we are calling them only capital indexed bonds. So, capital index bonds, yes, indexation. See, there are some sectors which are owned by government, railways, defense. For running those sectors also money is needed, but they can't give you equity because government wants to maintain full ownership. If they can't give you equity, what's the only way in taking your money? Debt. If they take debt from you, so you won't be interested because government rate of interest is very low. And plus in debt, we don't get investment benefit also. No indexation. But government says, please buy our bonds. Please buy our... Okay, we bring special bonds by calling them capital index bonds. Normal bonds, no indexation. These bonds, yes, indexation. Normal bonds, no indexation. But these bonds, yes, indexation. Understood? Logic? Hello? And second, there is something called SGB. Sovereign government. Don't... There is a limit. मतलब कुछ भी फेंको मतलब. Sovereign gold bonds, government bonds, समझ से issued by... While guessing का sir, there is no limit on. Guess anything, no. Guess anything. Sovereign gada bond. Huh? नहीं. Not those words, huh, please. Classroom. Understand. Don't specify, bro. Understand what is happening here. Remember, India is the largest consumer of gold. People have already purchased gold. Because people have already purchased gold, we have to go and beg in front of them. Please surrender your gold. Please surrender your gold. And we issue gold bonds. Because they are begging, they have to give you the massive benefit. What benefit? Not a capital asset only. Government now gets an idea. As the English proverb goes, to nip in the bud. Too much of English? Okay, simple. Prevention is better than cure. Sounds good? Why let you do something which government does not like and then beg in front of you, please surrender your gold? What was earlier happening? You have purchased physical gold, but now government wants that physical gold and gives you bonds. Because you already purchased, you don't want to disturb that purchase. So government has to request, please give no capital asset, no capital gain. But now government has found the better idea, innovative idea. Government knows that you are going to buy physical gold. Before going, they stop you on the way. Look, where are you going? To buy gold. Okay. Why are you buying gold? Sir, it gives me good return on investment. It secures my future. It has liquidity. Okay, fantastic. I give you a similar asset called sovereign gold bonds. Close your eyes and imagine that you have, not you, everyone else. Close your eyes and imagine that you have purchased physical gold. What is the benefit of that physical gold? Good return on investment, liquidity, everything. These bonds will give you the same thing. Purchase these bonds at today's gold value. And RBI will redeem these bonds at the prevailing gold price. So are you getting the same return on investment as gold? Plus that physical gold, you have to take care of safety. These bonds, you don't have to take care of safety also. No one can steal. And just like you can buy gold in small amounts, you can buy these bonds also in small amount. These bonds will do exactly what gold does for you without any risk. Don't let you buy physical gold. Day one only, buy digital gold. Close your eyes and imagine. Not you. Close your eyes and imagine that I have day one purchased physical gold. This basically is serving as a substitute for that physical gold. Now there you had already purchased gold, so they were beggars. So they had to say not a capital asset. But are these bonds capital asset? Yes. So when their redemption takes place, will there be capital gains? Yes. But there is only one problem. Sir, when I invest in physical gold, I get indexation. You are motivating me to buy these bonds as a replacement of physical gold. We can call them digital gold. But these bonds don't give indexation, no. Then physical gold is better. So don't worry. These bonds will give you indexation because we put them under the exceptions. Are we clear about those bonds and these bonds? Those bonds, you had already purchased gold and they wanted to exchange. So they had to give a better tax benefit, not a capital asset. These bonds, you have not purchased. You have purchased them as a, here you have not purchased physical gold. Here you have day one only purchased the bonds as a substitute of physical gold. The first set of SGB was issued by RBI in somewhere in 2016. So the redemption took place last year in 2024, and people have earned massive return because between 2016 and 2024, gold prices have dramatically changed, and people got the value of the present day gold against the bonds. So people are now liking it. So they are releasing by sets. So anything that was purchased in 2016 will be redeemed in 24. 8 years ka you have that lock-in period of these bonds. That also, first 5 years is compulsory lock-in. Thereafter, you can trade also. More rules and regulations will be framed by RBI. The typical logical target, you keep the logic in mind, is that these bonds will serve as a substitute for physical gold so that you don't have to buy gold and government does not have to beg to surrender. Don't buy only. Keep your money invested in digital gold. So we have to give you all the tax treatment as a physical gold, and thus for these bonds we will have to grant you indexation. These are not bonds, they are gold. Now imagine what happens with gold. Do we get indexation? We'll get here also. Is gold a capital asset? This is also capital asset. But when you already purchase gold and then we beg, so we have to remove from the definition of capital asset. Understood? Bonds and debentures, no indexation. Second, depreciable assets, no indexation. Bro, now if you open capital gain on depreciable assets block asset method, no, so you will see I have written something over there. Always short term, never long term. Always short term, never long term. Because in depreciable asset, no, we don't have identity of individual asset. We just know the value of block. Capital gain does not come on individual asset. Capital gain comes on the block. If the block ka total value is 10 lakh and I have sold the block for 15 lakh, so capital gain is 5 lakh on the block. Now it is possible that in that 10 lakh block, there was one asset which was 10 years old and one asset which was just acquired 10 days ago. We will never come to know the age of the block because we don't have identity. And therefore, as already taught to you in the chapter PGBP, we wrote this statement in PGBP, but at that time I told you ignore, you won't understand. Now you will go and check, you'll come to know. Always short term, never long term. Depreciable assets, therefore there will be no indexation. Depreciable assets, therefore there will be no indexation. Understood? We are doing tax benefit of long term. First benefit is indexation. We are done with meaning, logic, calculation, definition. Now we are doing exceptions. Next, there is a concept called slump sale, which will be taught to you later in this chapter only, section 15b. You don't know anything about slump sale, but now you know one thing about slump sale. What thing, sir? Section, no indexation. When slump sale will be taught, at that time you will be taught the logic. It will be done in this chapter only. Yeah? Capital gains ka chapter only I will be teaching you. Trust issues, anyone? Trust issues? Bolo? No. If I am saying I will teach, will I teach? And will I teach in capital gain chapter only? So we will do slump sale. At that time I'll tell you the reason. Next, NRI taxation, special rates of tax, are two cases where indexation benefit not available. as Hitesh has already confirmed. So for Hitesh, I have written this. And Chiku Chino Chibu, not applicable to you. You write, I will learn in May 28. You only said no, sir, nahi, abhi projector is more important. Okay. Because these two chapters are chapters of CA final direct tax. If it opens in 5 seconds, I will show it to you. Otherwise, you trust me that there are 2 chapters in CA final, not in inter. Chal open ho gaya. ये जल्दी करना है यार. You're getting late, no? Packing. Asking you, bro. No distraction, please. What are you asking each other? What is the time? Huh? Chai. Okay, what are you drinking since morning?
Green tea.
With the company around you, no? It certainly feels like something else. हाँ उसका स्टफ यू मिक्स नहीं हो रहा प्लीज जल्दी कर हाँ डू यू सी दिस NRI taxation here chapter number 4 and special rates of tax here. So these 2 chapters are a part of your CA final syllabus. You don't know anything about these chapters except now don't say CA final, except that in these 2 chapters there will be no indexation. Next, point F of which list? Oh, short-term memory loss. Huh? That means these cases you will not be getting the benefit of
Taxation.
huh. Any long-term capital gain that you earn on stock market. For people who deal in stock market, there is a special section, section 112A. A special section. Trading in stock market is going to be eligible for concessional rate of tax. So section 112A has given that concessional rate. Are we giving you some discount in tax rate already? You know, special rate of tax, we always segregate our income into normal and special. Like lottery winnings, we put in flat rate of 30%. Are we giving you a concessional rate by giving a special section? Then we will take away another benefit. And what is the benefit that we are taking away? Indexation. Later in the chapter, this calculation of 112A will be taught to you in detail. Stock market calculation is also part of computation of capital gain. Capital asset, taxable transfer, computation. We'll discuss this. Lastly, if a non-resident has acquired securities in India, we won't give indexation. So listed, unlisted, anything, we won't give indexation. Now the question is, sir, why? Because, you know, we are going to do one more question number 3. What is question number 3? Second benefit. In that, these cases have got a big benefit. Just like we are giving a concessional rate of tax here, we are going to give them also a concessional rate of tax. And because we are reducing rate of tax, you can't be expecting all the benefits from it. If we are reducing your rate of tax, then we will take away another benefit, and therefore we are taking away the benefit of indexation. So this will be later taught to you later in the chapter, but this concept will be taught to you in question number 3 itself immediately. But what is common between both of them? We are granting them a lower rate of tax, and because we are granting them a lower rate of tax, we have to take away some benefit, and falling in this list means what benefit we are taking away? We are taking away the benefit of indexation. Ladies and gentlemen, 7 cases in income tax law where indexation not available, or you can focus only on 5 because 2 are applicable in CA final. In 5, bonds and debentures, because you are not taking any risk, but Two bonds we will give indexation. Capital index bonds because government wants to encourage, and sovereign gold bonds because that is nothing but physical gold modified into digital gold. Depreciable asset we have already completed. Slump sale we will do later. 112A later in the chapter, and this last point will come in question number 3 itself. These are the cases where indexation will not be available in the income tax law at all. And the last point in question number 2. With effect from 27 July 24 means what? Amendment if the transfer of the asset has taken place on or after 23rd of July, means if the transfer has taken place till 22 July, old law, and from 23rd July, which typically means in CA final, your question 3 will be question 2. Because now if indexation is not available only, the topic is over, no? It is hereby decided or declared to remove the benefit of indexation from the income tax law. They say remove, and then later you will realize when we learn the law further, when I teach you question number 3, before we go to taxable transfer, when I say capital asset is over, later you will realize that I have to keep teaching indexation, the calculation to future students also. Because while they say indexation is not available on any asset, for one particular calculation, they have kept indexation. Hey bro, you keep for one calculation or for all the assets? Then it has to be taught. Means you also still have to learn indexation because it is typically applicable till 22 July. Future students indexation is not applicable for anything, only applicable for one calculation, but for that one calculation, full question number 2 has to be taught. Think about it. After the break, we spent only a few minutes for that 1224 amendment wala part. Majority time we have done this only. Full thing has to be done. Time pass ki book for one call, only for one calculation. And in any case, you guys that way are immune to this, because bro, for us the indexation is full-fledgedly applicable provided the transfer has taken place till 22 July. Correct hai? Ladies and gentlemen, if my capital gain is long term, I am going to be eligible for 2 tax benefit. Benefit number 1, indexation. Sir, what is indexation? Increasing my cost. Therefore, it is benefit. That's meaning. Logic is what? Opportunity cost. Calculation is what? Take your cost. Multiply by CII of transfer year, which will invariably be 363. Divide by acquisition year. If base year, then you have to learn. In between, they will give you. You have to learn 2. Base year 0102, 100, and exam year 2425, 360. 363. Correct hai? Then there are some cases where indexation benefit is not going to be available. Hello. And with effect from 23rd July, indexation benefit is not going to be available at all. Correct. Everyone. Now, which means that now we have to go and do what? Question number 3. What is question number 3? The second tax benefit of long-term capital gain. Correct hai? Bro, second tax benefit also has undergone too many changes. If I start now, I will not be able to complete it. हाँ हो गया 4 घंटा. So पता ही नहीं चल रहा है. How time is going, we don't realize only. Please make sure that like this, without realizing, May does not come. Sir, how time? No, but sir, after your lecture, we do realize how time goes. So ladies and gentlemen, for want of time, in a matter of few minutes, I will not be able to do anything in question number 3. I will have to leave you. But then, please make sure, I already told you that ek to tomorrow, between 12:31, whenever budget gets over the tax part, 10 minutes we will start. So you all to be, if possible, be present before time. Okay. And secondly, every word that we have studied, you have to study and come, otherwise things are going to get difficult for you. Very difficult for you. Huh? Capital gain may, it will become complicated if you don't stay with me at part. Okay, so I will see you guys tomorrow, please. Thank you very much. Have a nice day.